Hey everyone, Douglas here, and welcome back to the MMT Macro Trader live stream. Maybe not as cool as last week. Usually I say this is the one you don't want to miss, but I'll be honest, last week was pretty darn cool, and if you haven't seen it yet, last week was the one you don't want to miss. But we're back. Just Bijou and I this week for hopefully an exciting live stream. I do have some fun stuff to share tonight, and Bijou and I, we really haven't even talked much since last week. We had a few brief conversations, so I have some stuff to share with him. We have some things to discuss. Usually we do some prep talk ahead of time to just make sure we're on the same page. But we're just gonna wing it. We're gonna wing it, and you'll get some real candid discussion tonight. We'll answer your questions. We'll kind of hit the high points. I have some stuff I want to share as well, some deep learning work I want to share as I piece together a bit of a tweet for that. But anyway, welcome everyone to the MMT live stream. Bijou, how has your week been this week?
Yeah, a bit of interesting stuff happening at work. You know, not the greatest, but doing a bit of background reading. Trying to follow up a bit on Warren, but didn't actually have a chance to go back and look at our chat. But there were a couple of sections where I was responding to the chat, and I kind of missed Warren's points. So some stage I'll go back to that, but haven't done that yet. Yeah, I'm looking over your work and just thinking of how we can even crack more into the problem of getting those forward returns, or even whatever we want to try and predict using MMT. That's still got a lot of thinking to do there, and it's really interesting stuff.
One of the things, I kind of spelled some of these out in my most recent, maybe it was 2 updates ago on Patreon, kind of my takeaways from during one of those updates, the takeaways from the Warren interview. And I'll tell you, my overall takeaway is that I guess I feel pretty... There's nothing that he said while we were kind of going back and forth that I was like, holy crap, like I've had this backwards, right? I felt pretty much in line, and he confirmed a lot of the things I know that I've kind of thought that I've wanted to ask him, at least the 2 or 3 things that I was really able to kind of drill into when talking to him. So that was encouraging, at least for me as a takeaway. So far, all the comments have been really positive. It seems like, I don't think there's ever been an interview that's been done with Warren that was quite in the vein of what we did, that allowed it to kind of go off the rails a little bit outside of just kind of the core MMT. So I thought that seemed to be well received. Did you have any kind of first after kind of the dust settled, any takeaways? I think we're in the same boat. I haven't rewatched it yet, but I do know kind of some of the notes I took right after in terms of the takeaway. And I think I dropped Bijou. Hearing nothing. I just thought he was intently listening.
Oh no,
now he's back. He's back.
I was typing, man. I didn't like my keyboard clinking to get into the feed. Sorry about that. Yeah, I was actually replying. So firstly, I think Warren has done some pretty not totally off the rails, but some funny stuff on the MMT podcast. It's hosted over in the UK with Christian Riley and Patricia Pino, and but he's it's like there's a saturation. There's a bit of a saturation with MMT because the core MMT government monopoly currency issuer stuff. You can go very high macro abstract level with that and apply it to all sorts of countries, right? Because then what you're doing is just sort of decoupling the politics from the monetary operations, and so the politics are hugely important, right? So that's what I call, did a bit of a blog section on this in one of my last pieces. That's the hard problem of MMT, the hard problem of cognitive science or consciousness is what actually is the subjective, phenomenal qualia of redness or pain or whatever. And so that's just completely beyond science at the moment. And so there's a hard problem of MMT. I wouldn't say it's completely beyond MMT, but maybe later on I'll try and remember. I'll try and make a mental note of that to talk about it, because there was a recent webinar where I where this came up. I mean, it comes up a lot because once you reach a sort of saturation level with the monetary operations understanding, you can be a bit of an idiot and get things a bit wrong still. But it's like all you need is Warren or someone, especially Warren, to just sort of jump on you and give you like a one-line wink, which he did to me this week.
Yeah.
And it just kind of auto corrects your steering.
Yeah.
But other than that, it's like there's a saturation point where then you're really into just subtle nuances. So it's kind of cool because I think MMT may maybe have a little steep initial learning curve, but then you quickly get up to almost top sort of expertise, able to troll neoclassicals and Austrians pretty well, within a couple of years. It doesn't take a PhD.
Yeah.
And then you're into more of the subtleties and the differences of opinion between MMTs. Some are real ultra capitalists and others are total anarchists. And like the Marxist MMTs are wonderful people. I mean, they're all sort of wonderful people because they realize what the constraints are.
Yeah.
What are the real constraints? And it's like you don't have to have this mindless rat race and just toiling for no reason just to make money. No. We can make it very productive, and whatever system your culture, whatever system your society wants, MMT can tell you how to optimize within what your culture will allow.
Yes. Yep.
So I always find Warren really cool because it's like it gets to a point where actually there's not too much totally fresh. It's occasionally he'll come up with some things about his banking days and his hedge fund days and stories, and it's like he might come up with a new anecdote, and I'm like, I was trying to figure out what that means because it's using a lot of banking, hedge fund managing, investment type jargon. That to me, you'd get it easy, but to me,
some of the stuff he goes over though, even then, I got to slow down and and make sure I'm understanding it because he has. I mean, he was steeped in that for 40 years of his career, so. It's very
when it goes over my head too, buddy, so don't worry.
Speaking of which, Jesus, there were two things that already got brought up that are things that I talked about during my most recent Patreon update. Actually, I think it was 2 ago now. But that was one of them in terms of the passive. What he was referencing, Jesus, I'll highlight that comment. What he was referencing is not passive income, but he was referencing passive investing. And what passive investing is effectively what anyone with like a 401k usually does, right? You get a 401k, you get some sort of match, you put your $1,000 away a month in the 401k, and that usually is just set up as if you're, depending on how old you are, let's say you're 35, usually you'd be like 80-20, 80% in the S&P, 20% in bonds, and there's an investment theory that essentially says, I think it's Efficient Frontier, that just says that's the best long-term strategy, and the older you get, the more you want to go into bonds and the less you want to go into equities, and that's effectively passive. In other words, there's no active thinking about, hey, should I buy Microsoft instead of Google? Should I buy energy companies as opposed to textiles companies or whatever, right? I mean, you get the point. So active, you're actually having analysts go out and determine what are the best companies, what are going to be the best revenue, profit generating companies, what are the best companies that are going to appreciate in price, and which ones are going to give me the best dividends. That's active investing. Passive investing is just buy the entire S&P 500. I, by nature, am what I do in my investments is really to exploit the passive side. I mean, it really is an exploit of passive investing, because my theory, and this is why we kind of had this back and forth about the not only passive investing, but also that the government kind of sets the price of the stock market when it creates this channel for passive investing. And the reason passive investing exists is because there is such a huge tax break on your 401k, right? And so there's this tax break on 401k. It creates a relatively speaking stable return. I know the S&P can get very wild and stocks can get very wild, but compared to say uranium or wheat or oil or anything else you could possibly put your money in, the S&P is a little bit more stable. And so it just, this passive funneling has happened. Now, here's the problem with that is that the stock market operates on the idea that there's some sort of value of any given stock, right? One stock is worth 100, the other stock is worth 10, and one stock is worth 100 because it's, that much better relative to another stock, assuming their market caps are the same and stuff. Just kind of general speaking here. And if there's no analyst making a decision that Microsoft should be worth double Google, right? That's the right value. Then if that process isn't happening and it's purely passive, there's no decision. It's just I have money, therefore I put it in the S&P, and that's it. Well, eventually you lose the price mechanism process, the pricing process of those underlying assets, and then the price becomes pointless, right? The price becomes pointless.
Like zero intelligence agents.
Yes, yeah. We were just talking about everyone live. Yeah. It really is. I mean, no one's actually making an intelligent decision, and the question is, it's one of those things that we just don't know what's going to happen. There will be a point in time where passive investing makes a big problem for the stock market if it becomes. If it becomes the majority, we don't know where that is, if it's 50-50, if it's 60-40, but at some point it will wreak havoc on the ability to set prices of individual stocks because that mechanism will be gone. And then what is a price then? We don't know if it's going to, we don't know if it's going to make the stock market fly higher, if it's going to make it fly lower, but it'll be seen in some activity that takes place. So that's passive investing. Warren's on board with the idea that long term that ends in a place that we don't really want to go. But I actually think his fix for where, how you could kind of rearrange the stock market is a good way of fixing something like that. I mean, then it would require, and I think you should go to active investing too. I mean, I think you should. I think the exploit I have should get removed, and we should go to an active investing because you should look at the difference between a company like Microsoft and Google and say, one's better than the other.
Absolutely.
And here's why.
Have an expert do it for you.
Yeah. Exactly. Yes.
What did he move from like $2 cap on the share price to 20? I think last week.
Is that the range? Are you saying is that the range?
I don't know. Yeah,
I think that's
last time he brought it up it was $2.
Oh, okay.
And I think last week it was $20 or something. I was again a bit distracted at the time.
I've always heard him say 20, but you could be right.
Is he? Okay.
Yeah.
That sounds real. I mean, whatever. It's like you issue 10 more $2 shares, whatever. Yeah.
Let's see. Everyone else who's jumping in, thanks for saying hi, by the way. I always appreciate the comments. And then if you haven't hit that like button, hit the like button.
Yeah.
Let's see. And there was one other thing that already came up in the chat. About the Eurodollar market. Yeah. So one of my assumptions, I can riff on this for a second too, and then we can get into the meat of the live stream. But one of the assumptions I've always had is that there is the dynamic between domestic U.S. banking and rest of the world banking is slightly different, and it really boils down to the fact that deposits are insured. Domestic deposits are insured by the Fed, whereas overseas deposits aren't. And that's the discussion that we had. My thought has always been that as the dollar pushes higher, especially when you get surges, 6-month-long surges in the dollar, that's usually a signal that there's some reserve issues that are happening in the global banking system that can't by definition happen in the domestic system because of the way the domestic system is set up. But because these deposits that go, if you buy something, let me step back. If you buy something, if you buy a BMW from Germany, right, you're going to pay, in the US, you're going to pay in dollars. And then after a handful of exchanges, the German, the German BMW now has those dollars, and they're going to be on deposit in a ledger that is effectively a rest of the world ledger. And you can create, because you now have reserves, dollar reserves outside of the US, you can now create a loan off of those deposits and off of that being backed by those reserves. So to a certain extent, it is kind of a fixed reserve banking system. Now, the Fed has halfway figured this out, right? And they will step in and not let the system collapse because they know that will have knock-on effects to the US. But there is a different dynamic that's playing out there. So that's what was being discussed. My assumption has always been that that's been a problem. One of the debates, live streams, discussions that Warren has had recently about the Eurozone is that the Eurozone is starting to figure this stuff out. And he seems far more optimistic long-term than he would have like 13 years ago when they were first talking about there's a Bijou actually sent me the link to this discussion, this panel discussion back in 2010. They were very pessimistic about the Eurozone in the way that it was originally constructed. And they're starting to get a little bit more optimistic because I think not only has the Fed, but also the Eurozone figured out that this global system is not the best for anybody involved. There's constraints in it. So that's the Eurodollar system. I've always been very skeptical of that system, and I think it causes and has caused a lot of havoc since the great financial crisis to today.
So would you say to Josh, if you had like a 1 second elevator pitch, would it be like the Eurodollar system? It's like having a bit of a fractional reserve banking system over there.
Yep. Yeah. That's exactly
in this particular denomination currency. What do you call it? What do you call the Eurodollar, by the way? So is it a currency?
Kinda. Yeah. I mean, they're Eurodollar. You create a
new Maria. Yeah.
Yeah. You create a Eurodollar loan. Yeah.
And it's probably, is it non-convertible and whatever? You create a Eurodollar. Yeah, so it's like a little bit like a weird sort of gold standard or something.
Yeah, really it is.
You're mining this stuff from the USA.
And it really it is, and that's kind of the insidious part. Yes. Mine. Yeah, because what do? You go Exactly. Yeah. So instead of going and digging up gold, you go make a car and give it to some U.S. citizen, and they give you dollars. It's a bad system, but it is.
I've got to close my door for a second. I'm annoying my daughter. Hang on. I'll be back in a second.
Let's see. Well, he's doing that. Believe it. Active investing, real estate, velocity banking, 105.
Did I just miss? We solved every problem.
That was it. So anyway, I call that the Douglas equation, and that is that is the theory of everything wrapped up.
Damn.
So anyway, until next week, everybody.
Anyway, yeah. My daughter has sensitive ears. She's a biologist, but she's also a pianist.
I'm surprised she's not watching the live stream like everyone else right now is.
Well, if we had classical music accompaniment. I'm going to get back to Michael on that, but probably not live stream, Michael, on the consciousness. You could read my blog maybe too on that sort of stuff, the physics one. Yeah. Okay. Well, so where are we at now?
We're getting some people.
Eurodollar.
Yeah, Eurodollar.
Got any questions on that? Just keep asking.
I do want to change gears a little bit. Headlines. We did have headlines come out, which headlines always open the door for some snarky tweets.
Go for it.
That is that is the best part of it.
There's no end to them, man. Bottomless wellspring of stupidity.
All right. So the Fed minutes came out today. If you're an investor, you know this is any big macro news event always sets up potential major moves in the market. Now, pre-COVID-19, we would have been in a situation where anything inflation was just a nothing burger. No one cared about inflation. Inflation data, FOMC minutes, never made the markets move. But now they do. I mean, there's a ton of hedging that takes place around markets during and before big announcements. And when the Fed minutes comes out, that's a big one. So the Fed minutes came out, and that's just the minutes from the prior Fed meeting when they set the rates. And it turns out that they are resolved to keep fighting inflation with rate hikes. So they still haven't figured it out. There seems to be no indication that they're aware that they have it backwards at this point. And it looks like full steam ahead on the rate hike front. Yeah. So I mean, make of it what you will. But you know what I tweeted out today, and we talked about this during the live stream with Warren last week, is everyone knew that the zero interest rate policy was going to cause eventually hyperinflation, right? We went 10 years with that. Nothing. We didn't get it. We not a drop in the bucket to inflation. The flattest inflation that we've ever seen. And now all of a sudden the opposite's supposed to come. I mean, it's supposed to stop the inflation. It's
an extreme case of cognitive dissonance and like what Warren said, reverse confirmation bias.
Yes,
like they have to make up some insane story in order to confirm their neoclassical biases, and it's just hilarious seeing them twisted to pretzels and things. There was a good one, actually. Mike Norman did a little good one on this. He just picked a couple of the Fox News type audience, right? Finance bros, and just ridiculed them or mocked them a little bit. Just how they look at the job. One guy was looking at the jobs data, and he's like, "What?" It was like you imagine a Democrat watching Trump win in 2016. Or the reverse of Trump. He's still watching Biden win in 2020. It's just like, what?
How can this
be? This has got to be wrong. This is the Bureau of Labor Statistics. They made up the numbers. It's like hilarious.
It is anyway. Actually. I still think it's pretty darn cool how hot this economy is running. I mean, I think that's the good thing, given the last 3 years that we had. I think it was this week, I think it was OpEx following, it was the Monday following OpEx, where in February of 2020, where the market started its 35% plunge. So we're essentially at the 3-year anniversary from it looking like the world might end to, getting back onto normal. And, I think it's pretty cool. I really think it's pretty cool, the sort of growth, the sort of just economic expansion we've seen, and the fact that the outcome could have been 2008, right? We could have had a 2008. And I know I'm speaking to the choir here. I know there's not going to be a neoclassical person that's going to listen to what I'm going to say.
I wish there was.
I wish there was.
Us, guys.
Yeah,
give me your best argument. Please.
Yeah.
I want.
And the inflation sucks. Don't get me wrong. I don't do the grocery shopping in the house, but my wife has explained to me that it's no fun. I have 4 kids, 3 boys, three of them are going strong into puberty, so they're eating 2,500 calories a day at this point, and they're shooting higher. You can only imagine what our weekly, our biggest expense is not our mortgage right now. Let's put it that way. It is, it is our grocery bill. And inflation sucked, but all things considered, I'm not worse off than I was 3 years ago, given the interruption of the pandemic. And I think that
what. Sorry, you can finish that.
No, finish. No, you're good.
Well, what is the real interest rate? It's got to be inflation adjusted.
Yeah.
So the real interest rate is actually pretty low, but even that still sucks, right? Because if by no fault of your own, because unemployment, you're in the precariat. So we're talking about the majority of households here. You have to put some freaking groceries on your credit card. Going to really hurt you at the moment, even with a small real interest rate, and they're only just looking to push it higher. And so the thing is, Warren is right, but he gets dunked on by a lot of the sort of lefties, because he's like because he's an MMT era, and because he's very well known in the MMT community, and because MMT has a lot of lefties, they really beat up on him for high interest rates is boosting the economy, but totally forgetting or not bothering to realize that he constantly would say, "This is regressive. This is a terrible way.
This is not a good way to do it." Yeah.
And it's trickle down economics.
Yeah.
But I just want to say one other thing, because it's probably irrelevant, right? I was going to say this later, but in Australia, it looks like they are experiencing the downside to the high interest rates.
Okay.
So the Reserve Bank of Australia just mindlessly using the interest rate as their tool weapon to fight inflation. It's not doing the job, but it is actually starting to crush them. I'm not sure. I'm not an expert on the Australian situation or the real estate market and all that, but I think there's quite high private debt levels there and so forth. So structurally a little different to where the USA is at the moment, and so they're actually maybe leading the charge down off the cliff. So you go up this ramp, right? It's boosting the economy, and then suddenly you realize the ramp has just run out, and so it's going to go off. And so I'll post the link to the in the chat to Bill's thing there.
I'll pull up real quick the Fred BIS data. I think the quarterly BIS data just updated. So BIS Australia. I shifted back to the chat screen so you guys can't see how bad of a speller I am when I search this stuff up. Let's see if I can find total credit to private non. That's for the U.S. I don't want the U.S. All right.
I think the unemployment in Australia is one of the key things. It's starting to go down. So it's not necessarily the rate hikes that cause the unemployment. It's the lack of injection of income where it's needed. So even though the rate hikes there, because I think they've got a fairly decent debt to GDP ratio, government debt to GDP. But the trouble is, at the same time, they've got a high household debt ratio as well. But anyway, what was I saying? So the high government debt to GDP ratio injects money into the Australian economy, but A, it's not going where it's needed. B, it's not going into getting the jobs, and so giving the jobs, and if it's going into just pure welfare, that's not creating jobs, and so I think the jobs are starting to go down. Australia raising rates a lot slower than New Zealand. Yeah. Oh God. Yeah, New Zealand's not so healthy either.
I did pull up. Oh, I think I pulled up the wrong one though. I did pull up the Australia. No, this can't be the right one. I did pull up the total the total credit to private non-financial sector. Yeah, that is the correct. Okay.
Uh-huh.
They didn't get the acceleration that they did back in the pre-Great Financial Crisis, but they are going lower. Yeah, to be honest, I just don't pay too much attention. Sorry, guys. Quite literally on the other side of the world for me.
It's maybe a slow squeeze of jobs, I think. Yeah, so the tragedy is so easy to get out of that. Anyway.
I mean, the other thing too, though, I do know that Australia. I mean, same thing with like Canada. There's a lot of like resource based. Their economy is much more tied to
minerals.
Raw resources and that sort of thing. And they've been taking a hit. As of late. I mean, oil's kind of been pushing lower. I think lower than I would have expected at this point. But actually, I can tell you, I use this comparative inventory model, and it's starting to support a lower oil thesis. So we'll see how long it lasts for at this point. But that is it's actually one of the things I've been working on. One of the things we'll talk about tonight, I'll bring up in a little while, is putting the finishing touches, or essentially, for my part, have put the finishing touches on one of the proof of concept models, deep learning models that I pieced together for unemployment. And the next thing that I'm working on, and just so you guys know, I mean, along the way, I'm working on like the super trading bot. We're getting some good first steps towards the super trading bot, but along the way there are some other things that I just want to work on. So the next kind of project I have is to build something for inflation, and one of the things that I'm gathering for that is data that is out there for essentially supply side data. What is the inventory of really any commodity that we can track. And the U.S. has some pretty darn good data, monthly data on inventory. And at every corner that I'm turning right now, and I can't wait to get this project off the ground, but it really does look like, I mean, the supply side story is so correlated with inflation. And I can't, to a certain extent, I can't wait to get it all put together to really see if we can get a jump on the supply side input to the overall equation on inflation. Anyway, those are my thoughts. Something cool to look forward to. I'm reading some chat here. It's a good person to follow. We're going to pass. Yeah. Mike Green, and last name Cole. I'm forgetting his first name off the top of my head, and he has is it Artemis Capital is the name of his company, but they've done a lot of stuff regarding passive investing. Bijou, is there anything else you wanted me to pull up before we get into kind of the next segment? I think I can go over. I would like to finally put a bow on the Kelton classifier model.
Yeah.
Chris Cole.
Yeah, I might tinker with the Kelton classifier just for playing around with it. I think it's good to maybe summarize that and put a bow on it for now. I don't know. I just wanted to. Well, I've got a lot of stuff on unemployment and all the costs of that, but that's maybe for later.
Well, how about this? Why don't we finish up on? Why don't I jump into the Kelton classifier stuff? I'll show the new stuff I've worked on. The reason I want to show this again, I know we talked about it briefly a couple weeks ago, maybe it was a month ago, but I've effectively perfected the model. I ran the model on some data that it shouldn't have any.
Wait a minute.
Yeah.
Wait a minute. Hold that thought. Because I just remembered what I was going to say related to what you said on the commodities and that.
Oh yeah.
I mean, the point with Australia is there's no reason why that has to affect their economy, at least employment. It will affect the distribution of their income and so forth, and who gets to work in the mines. But that was the thing that Bill was quite good at emphasizing, is that when you look at what the government policymakers, the politicians are saying, they put into their speech like it's artificially high frequency of words that the Reserve Bank of Australia is independent of Canberra, independent of the government. And they even have it now, it's called the IRBA, the Independent Reserve Bank of Australia. Like the politicians are desperate to shift all of the blame onto the central bankers who don't have the policy tools to deal with inflation or unemployment. It's just complete madness. So yeah, just wanted to finish that little conversation.
Yeah.
Okay, Kelton classifier then.
Well, yeah. On that note, to be honest, today I did get a little cranky when I read. Some of the stuff does get me a little cranky. I was feeling a little cranky because it does. Yes, I agree. It can get me off the rails a bit. Let's see. All right, let's put a bow on the Kelton classifier. The reason I'm talking about it is pushed it a little bit further, a little bit harder. Have some good findings to show. The other thing too is I'm piecing together a big tweet. I want to do a good thread on this, nice, clean, to the point. Certainly, tweets get pushed in front of a lot broader audience, and these sort of things can really capture the attention of people that wouldn't ever, take the time to watch a YouTube video. So, and I can just trigger some monetarist, admittedly, with the way I
first tears.
Let's see. You're saying has been on Steve Keen. I'm sorry, I'm reading that tweet.
Were you on Steve Keen's show, or were you on Applied MMT?
I've been on Applied MMT. Steve Keen tweeted me out and has talked about my work before years ago, but I've never been on his show yet. Hopefully I can get on soon. Cool. Let's see, Kelton classifier. I've got the code pulled up here, and it's a ton of features. Okay, so in a deep learning model, you have features, right? So you can envision, here's your classic Excel spreadsheet. every column is a feature, right? You have taxes, there are a ton of features here. Let me actually go to you've got taxes. I'm sorry, there were 36 features in this model. You've got taxes, you've got government spending, you've got what else? Oh yeah, and you have credit. Yeah, credit. So the core concept to the Kelton classifier was, can you take the core idea of MMT, which is the sectoral balances, right? Government spending, private sector spending or saving, and then the rest of the world. Can you take those components and only those components and get some insight, learn something from those components using a deep learning model and predict unemployment, right, to any intelligibility? And that was just is there something in the data? And as we had talked about in a prior live stream, that's exactly what we were able to find. We were able to get that out of a deep learning model. I'm trying to think. Did I?
Yeah. If you're looking through frosted windows at something, can you see the thing moving when it's actually moving?
Yes. So here's all the features. You can kind of just see the charts. This is just printed out, so I make sure everything looks the right way. But you have, bank credit. And then I take different derivatives of each one of them, right? I want acceleration. I want percent change. I'm just helping the model, right? I mean, these are all things the model could eventually figure out. But to kind of speed things up, we're going to go ahead and assist the model by taking derivatives. But it really is just bank credit. It's bank credit CPI adjusted. It's government spending CPI adjusted. Taxes, which is part of government spending, or in that case, the removal of government spending. And then rest of the world, and apply that's through the 1980s, I think is when this thing starts. And then what you do is you take the unemployment rate and you shift it back in time, because what we're trying to do, and this is really important, and hopefully you can kind of make out what's happening in these charts. We're not trying to predict or understand what the unemployment rate is today. We're trying to see if this data can predict what unemployment will be in the future. So if you can envision, you want to move the unemployment graph back in time, because it's really, you're trying to predict with today's data what it will be in a year, and then to actually do the training, you just shift the data back. So that's what these are for, and that's what we're testing on. The other thing is we want to drop the unemployment data from the feature set, right? So obviously the model needs to know what unemployment is to learn how the data can translate into the unemployment data, but we're not going to give it the unemployment rate to learn from. We're gonna keep that separate. We're gonna run a few tests here. One of the models will have it, the other model won't, right? So it understands. I mean, it gets the answer in the back of the book of what unemployment is, but it doesn't have it to train on. So you'd expect a model that gets the unemployment rate to operate better, because it just knows what the unemployment rate is. It knows the boundary of what unemployment could be, because we've given it to it. But can it still suss something out? Not getting it. You can see right here, X data. I drop all my unemployment data, so that gets taken out, and then we build a model. If you're familiar with this stuff at all, the final model ended up having 140,000 parameters to it, so a decent sized model. 3 LSTM layers into just one dense layer. The big thing, again, if you're familiar with deep learning, the big thing that really let this thing take off and really allow the learning to take off was to apply what's called regularization. If I'm losing you guys, I promise it's cool. But this is important stuff to this is really important stuff to understand. Yeah, the other reason too, this is my ADHD kicking in. The other reason too I'm doing this right now too is, look, I'm going to make this like a 5-6 tweet post. Again, I want it to get out there. Inevitably, the PhDs are going to come yelling at me. Well, you're not doing this the right way. Look, I did it the right way. I've got 5 tweets. I've got Twitter has, is built for the attention spans of people like me. Okay. Listen, we did the work. We tested a ton of stuff out. So part of the explanation too is when those type, exactly the type, I can give them this part in the live stream, and if they really want to kind of go at it with me, they can see I took the steps. I did kernel regularization. I did drop out. We made sure that there was no overfitting here. That's really what it is. The best explanation for overfitting is, remember when you were in math class and half the problems would be in the back of the book and the other half you'd have to figure out. But if you didn't want to put any effort in, you could just look at the odd problem that gave you the answer, go to the even problem, and kind of just get the gist and just kind of swap out the numbers, and eventually you'll get the right answer. Deep learning models can kind of do the same thing. It's probably the best analogy. They can kind of cheat if you don't do this thing called regularization and dropout. So we wanted to make darn sure that this deep learning model in no way was attempting to cheat, and there was no overfitting going on. That's what those steps are. And then finally we get our learning rates. We do the training. It trains for, I think I did 7,000 epochs, quite a long time. And we get our training complete. And what we're looking for is particularly the red and orange line here to slowly go down over time. And we get that. Those are called our validation loss and our validation error. That's essentially the validation is kind of like the real-time test data. We got what we were looking for. We got learning. And it is super exciting to see those lines slope lower over time, because that means it's learning. If it were to suddenly shoot higher, if it were to go down lower and suddenly shoot higher, that would indicate overfitting. After 7,000 epochs, we never got overfitting. 7,500, it looks like 7,500 epochs. So we got learning. That's the exciting stuff.
You got to understand, this is cool for us because, you know, we haven't seen anyone else do this before. But I do have to keep telling Douglas. Well, I don't keep telling you, but maybe this is the first time I told you, or the second. But you know, it's like if you put this on Twitter, you got some guts. It's like high school kids sticking their homework on Twitter and saying, "Look, see, I've proven this.
I've proven MMT."
So a whole part of that whole exercise and praxis of Twitter, which I think anthropologists are going to be writing lots about in the future, is you know, a little bit of trolling there, as well as you know, proof of concepts and that. You know, if you can do this better than us, go for it, man.
Yeah. And then, in all sincerity, again, I know no one's on the other side is gonna believe me, but I have nothing to. God, I'm reading the questions now. I shouldn't have opened up the chat because now I'm distracted. I have nothing to gain or lose if MMT is you know, is the right the right view of the world, right? I mean, if it turns out that the geocentrists are right, I'm not at a loss of anything. I'll let my kids know that, you know, actually, as it turns out, the sun goes around the earth and we were wrong.
Yeah, Ptolemy was right.
And exactly. Yeah, we'll move along, and that'll be that. And to a certain extent, I feel the same way about MMT. If it turns out that, you know, it's actually the banks that are lending to the government, and that lending, I mean, it's not. I know it's not, but if that's how it turns out, I don't feel like I'm at a loss, and I'd rather just know and move along than not. So if anyone's out there and wants to refute what I'm doing, I would love to see it. And then maybe instead of being the actually, I'm already baked. I already have it baked in. If it turns out that monetarism is actually the correct view, I mean, I'm just going to switch the M in MMT to monetarism, and I'm good. I'm good to go, right? I mean,
MMT has monetarism in it. It's like it's just like a different frictional world.
If the government decided to go,
monetary operations don't change, but you know, you can craft a monetarist world if you
that's
really
true.
have
that's true.
Awesome power.
That's a good point. Like
Thanos power.
Yeah.
I think feature detection and all that, and putting in causation is tricky with neural networks because they're a bit of a black box. Just to Guy Midgley's point in the chat here.
Yeah.
But what happened is we were for laughs. Well, I mean, for serious laughs is, you know, you noticed there that Douglas had the huge COVID spike, which is going to mess most models up. But the neural network seems to sort of plow through that a little bit. although it does cause it, hernias and, well, neuroses. But the thing is, one really cool idea Douglas had was, let's just put a column in the data set in the time series for like asteroid strike, and just give it a 0 everywhere, and make it 1 when COVID hit.
Yes, I did try that.
There's no historical time series that is going to give you like the level of pandemicness.
Yep.
in the treasury data.
Yep.
So you could look at fiscal flows for like spending on healthcare or something like that, but
to offset, yeah.
But if you can, it's like never ending number of features you could add from all the financial data, and we're just looking for a kind of a minimal set.
Yep.
But yeah, that was an interesting idea. Put in a
which we tried. It didn't yield all that much of a benefit. So anyway, here's the final chart, and we got learning. It worked. Look, this is not a model that I'm going to publish to actually use. This is not the route I would go if I truly wanted to predict unemployment going forward. But the point is, there's something in this data, and it's predicting something that I think both the neoclassical and the monetarist would say really shouldn't have much predictive power, right? So that's the exercise to me. Is we know that LSTM models, deep learning models, they are magical. It is amazing the sort of work that they can do when you apply them. And it's really just use that magic to see if that magic can figure out anything with the data. Make sure you set it up in a way where it can't cheat. And if you get some sort of validation, essentially I just did a month's worth of work to do what Granger Cause kind of can tell me anyway, but I wanted to validate, and I think there is a lot of validation here. So we definitely see some correlation. I also ran it without unemployment. This actually was with. This is without. So this is with unemployment data in it. So you do get a slightly better understanding, a slightly better track of the data when you do include the employment data itself in the learning. And here's the cool thing, right? So we gave it the unemployment data. We gave it the data that we think should be able to give it some insight into where unemployment's headed. And again, we're not giving this model like big insights. We're not giving it weekly jobless claims or anything, right? We're just giving it government spending, private sector surplus or deficit, and rest of the world. That's all we're giving this model to learn what the unemployment rate should be. Let that sink in for a second. Just think about how amazing it is that this model can predict what unemployment's going to be, and have just a general idea of what the unemployment trend is, given the data that we're giving it. We're giving it the sectoral balance data, and that's it. So the question is, okay, if we give it complete noise, is it powerful enough to figure out unemployment? Because if it is, if we get a similar result just giving it complete noise, then that kind of invalidates our findings, right? It just shows that really what's amazing is neural networks, right? Not the data. And the final test I had was to gather a ton of data that I think really shouldn't have much correlation with unemployment or not, and see if it can make any predictions. And so what I landed on is I got a bunch of local weather data and population data from the FRED, and you can see the various items I chose here. But I ended up on like precipitation, monthly precipitation. I ended up on temperature data, and I ended up on population data, and took a bunch of derivatives of those: rate of change, acceleration, all the same to what I did with the prior model. You can see the various features here. Run it down. It learned. So we got learning to take place as well. And I applied the exact same model with the same features and the same structure and everything. And there was learning that took place there. So we were able to get validation that the model was able to learn. The question is, what comes of it, right? And I had two hypotheses, because I've ran tests similar to these. Sometimes you get incredibly dynamic systems. You get noisy systems, up and down, up and down, up and down, no boundary whatsoever. Or you get completely flat systems. In other words, there's just nothing in the data to learn from. It'll find little cycles that exist, but there's nothing to actually learn from. I lean probably the second route, that it would just be a flat line. And lo and behold, when we run down to the data, that's exactly what we get. We just get a flat line. There's just nothing here for the model to learn on, which means the other model had actual learning take place. And I think that is the cool part. I don't know how I'm going to incorporate this in the final tweet, but if you're here watching this, you'll understand that like it happened. This model learned. It learned the unemployment rate from the data in a way that pure noise can't, which means there's something in that data where you can understand what's happening with unemployment. And I think the only way you can make sense of that is via the MMT explanation in terms of where unemployment comes from and the dynamics that are happening when you look at what the outcome is of that actual sectoral balance data that we stuck in the model. So that is the research that I have for tonight that I'm obviously geeked on. So
it's satisfying to see that kind of flat line.
Yeah, it was
because that's what an ideologue, Austria, classical, UK, that's what they would probably not even bother to do, right? It just is like, oh, something went wrong there. Let's just ignore that.
Mm-hmm.
Well, there was a couple of things. One is the bank credit time series that you had, which was a long-term rising trend. I wasn't sure why that was in the inputs. But anyway, that's for later.
Bank credit CPI adjusted.
Oh, it was a green line above, but don't worry about it. Yeah, because most of them look like derivatives or something.
I did put the actual level in as well for every single one of them.
Oh, you did put the level and the rate of change.
Because what I wanted to do, it made sense to me. Maybe this is not the way I'm supposed to do it, but I wanted to let the network know that I was taking the derivative of something larger. And I also gave it the CPI data itself, so it knew when I said, when I told it I was taking a CPI adjusted whatever, that it also knew where the hell I was pulling that CPI from as well.
It knew. I don't like the word "knew." It
knows.
You knew that.
It knows in the same way you and I know.
Okay, that's fine. I just wondered what happened if you only focused on rates of change and kind of that kind of like differal system
to cut the data out. Yeah. Well, you've got a copy of it. It's all yours now.
Thing is, in a dynamical system mechanical model, you would have the actual levels as part of the generating function for the derivative. So I'm just very skeptical that neural networks are really doing that. It's mostly just statistical lookup table stuff. But anyway,
hold on. No. I'll go down this path with you for a quick second.
At least TM, I can believe it's got memory, so it is maybe doing a bit more than just pattern recognition. I'll grant you that.
Here's the thing. I think what the neural network is doing is actually quite simple, right? I'm not saying it's that complex. I just think that as humans, we like to think what we're doing is far more complex than what we're actually doing.
Hang on. No, that's not right. That's not right. What we input and output is very simple. Okay, so our behavior, like the story that you can tell about the time series causing this and blah blah that, that's very simple, because you're using a fairly sort of simple mental model, but the cognitive processes, right? So the subjective understanding, awareness of these things as a sort of a metaphysical reality is way different to a neural network. That's why Chat GPT and Copilot and all the AI stuff, it can only give you good answers to past questions, and you can model your science. I'd say you can model your scientific hypothesis and theory formulation ideas in mathematics would be homotopy type theory type of models, and you can generate theorem theorem generators these days, and you can generate theorem provers and all that, but still you're just canning your human understanding, which is a very different thing. So it's what humans are doing is extremely complex, but what comes out can be modeled by a dummy.
It's only complex. It's only complex because we don't fully understand it yet.
No, if we don't fully understand it, it's hugely complex.
But it's only complex because 100,000 years from now, the issues that we're trying to solve will not be complex, right? It'll just be like, I mean, there's nothing complex about understanding how to get a rocket on the moon, right?
Right.
I mean, but in 1930, that was really. In 1920, that was really complex, right? I mean, my point is, my point is, at some point, we'll understand the biology, we'll understand the physiology, we'll understand everything up and down to understand what's happening, and it'll look really simple. I guess here's the question. I put in the AI bot, right? I ask it some really esoteric question, right? And it's like, I don't have an example off the top of my head, but I ask it some question. There's just no answer to that question, right? And the reason there's no answer to that question is there's nothing that's ever been solved. Like the equation necessary to answer the question that I'm asking just doesn't exist yet, right? That learning hasn't happened, right? Let's say that's let's put it this way. When the AI bot understands enough to go out, I ask it a question, right? Hey, solve this problem for me. It understands enough that it doesn't know to then go get and create the knowledge, run the test, and come back to me with the right answer.
Right? No, you understood enough, and you also didn't understand enough to model and program your neural network.
Yeah, but when the neural network can then create its own machine to do the learning that it needs.
But what do you mean by own? Who are we talking about here?
I mean,
it's not sentient. It's not sentient. I
guess what I'm saying, here's really what I'm saying. We're not sentient either. I think that's what I'm trying to say. I don't.
You might not be sentient, but I am. I mean, I know I am.
This is good. This is good. Yeah.
I'm Thomas Nagel here. I was like, so I don't care. All you guys could be metaphysical zombies, but I know I am conscious.
Yes. Yeah. Oh, I'm conscious.
Yeah. No, you're only saying you're conscious.
That's a good point. Yes. You are.
I can never prove that you're conscious. It's like, what? I'd have to be you. So that's the whole point, right? So you have to be that neural network to realize that it's got an actual sentient conscious mind. And so, I'm never going to be able to be the neural network, right? I'm only going to be Bijou neural network sitting in Douglas's basement, churning away, trying to eventually become the sentient mind of Mozilla. Sorry to derail there. That was fun, though.
That was fun.
I think I did have another question about how to classify, but I think
a couple came up. Curious. One of them came up with this. Curious how far ahead can it predict? From what I can tell, this data. Are we in the third hour already? Yeah. We're getting a head start on this. From what I can tell, this thing is like best at predicting about a year to a year and a half out. That seems to be consistent across the board. Maybe 6 months to a year and a half seems to be the sweet spot for where this thing can predict. I realized when I made even further predictions that I messed up on scaling the data to get it in. Bijou will fix it, and we'll eventually get this published publicly, and then you guys can see. I've had to move on to other projects, but the sweet spot is about a year out. Maybe I'll try and fix it. I'll try and fix it this week and get you an answer as to where it should be heading. But yeah, the sweet spot seems to be about a year out, and that's just based on the various tests that I've ran going forward. I'm trying to think the next question that came up, how will neoclassicals, how would they try and explain what the model learned from this? My only guess is they're going to say, so I thought this through, and my guess is that they're going to say something to the extent of, if someone actually took the time to put this through, is that, well, of course this thing would learn, right? I mean, government spending kicks in after employment kicks in, or after, huge surge in unemployment, so it could get some understanding that there's been a huge unemployment spike. I think that would be one way they would explain it, but I don't think based on the way I built this model, I don't think you can explain what it's doing with its learning based on something like that. The neoclassicals wouldn't have the slightest clue about what Steve Keen has to say and about the bank credit dynamics that are taking place. I mean, that, to be honest, I bet that's where this model is getting the majority of its predictive force from. Maybe it thinks it can tell a little bit from imports and exports, but that would be my guess. So I tried to build this in a way where any explanation of it looking into the future to predict the past wasn't possible, right? It wasn't allowed in the way it was reading the data for the model.
Well, the trouble is the neural network, Josh, is a bit of a black box, and there's some dark arts that you could do to try and tell a story about what the neural network is actually, quote unquote, thinking in terms of. Okay, so the thing you got to think about there is that there is a dynamical system, so a bunch of causal deterministic equations that will reproduce your neural network results within some reasonable uncertainty. But you're never going to be able to write those down. And that's why you're doing neural networks, because you can't write down the dynamical system. Well, I mean, you could maybe accidentally do it or by luck, or if you're really super genius. So the neoclassicals can always criticize these neural network models or tell their own story by just reversing causation, or telling a different correlation causation story. Yeah. So they could say, well, what you guys MMT are saying is cause is backwards, and so they just do everything backwards. So you can do that when you've got causation or a system like a neural network model that doesn't explicitly show you the dynamical system equations, like Steve Keen or whatever, or even an agent model. If you have an agent model that does it, you can look into the rules that you've programmed into your agent model and just point out, okay, this is an MMT model. It's not neoclassical, so you can't do that with a neural network. So that's the issue you have. I think Warren actually kind of pointed out last week. It's like this COVID era and post-COVID is a massive case of confirmation bias. But then it's also like you could just get things all backwards and just say, oh, it's confirmation bias in favor of neoclassicals as well. But you have to really sort of twist things. And so people don't understand what the whole idea of parsimony is, and that the simplest explanation can often be the most likely. And so you've got to look at all of the weird things that neoclassicals have to use to try and tell their story correctly. But there's no doubt they can always tell the story with their epicycles.
Yep.
They just have to fiddle it around a bit more. Yep. So how much fiddling around does an MMT guy have to do, or girl? Not much. Yep. We have to do far less fiddling around. I just lost my screen there, but I'll keep talking. Here we go. Now, so just remind me, just the very last thing, I'm just changing subject slightly. See, back in the 1980s, where there's a bit of anti-correlation going on, I was wondering if that's an artifact of it's the end of the time series.
It's just picking up there. Very well could be.
So it's just because it's an LSTM model. It's not doing the classical, fingerprint, handwritten number, pattern recognition. So it's going to have a problem in time at the beginning and end of your time series, I reckon. Have you come across that on any of the tutorials?
My guess is my guess really is that we were coming off of the 1970s, and this will I mean, of course we were coming off the 1970s and heading into the 1980s. That is the sort of insights you come for for the live stream. That the 1980s followed the 1970s. You're not going to get that anywhere else.
This is genius, man.
Yeah. This is only the Doug bot can figure this out. this actually will answer one of the questions Guy had. Yes, the bank creation was in this model. That was one of the three features that were in this model. Is bank creation money via bank credit. And my guess is the model didn't know what to do because, the bank credit acceleration cycle starts off in the 1980s, right? And that becomes the main driver at that point of kind of correlation to unemployment. And so that would be my guess why it doesn't see things coming out hot out of the gate. There was just a bit of a regime change, but it's one of those things where I think as I'm talking out loud, maybe you are right. I mean, maybe it just does start from it's almost like
I'd accept both as good hypotheses. Be interesting to test them.
It's almost like it starts off as at a mean and then just picks it up from there, right? It's like, okay, we're starting off at the middle
seems like
point.
an artifact at the ends of the time series, which I think we should probably be aware of in the future models. But also I really did like Douglas. Well, when Douglas and I got together, we were talking about this fact that there's interesting regime changes from neoliberal era to. So if we have all the data going back to the 1940s, we were thinking we're not going to bother building a neural network to do all of that. This would just be a fun project, right? Because you'd never bother going back to the 1940s to do our investments work, but just as a sort of a exercise and education thing. You'd want to definitely have a different, just a totally different creature neural network that is looking at those different regimes. So you change, you change your neural network structure a little bit for each of the regimes, like the New Deal era, the OPEC oil crisis shock era, and the neoliberal era. Anyway,
that is
introduction credit cards. That's a huge permanent shock to the system.
Yes, yeah. That is one of the things I know you and I have talked about. We've it was one of the things we can talk about right now. I mean, if anyone's interested in listening to this conversation, I know one person that would be interested in listening to this conversation. There is I can maybe even pull it up. There is a learning model called Cindy, right? Sindy.
It's a whole methodology.
Apparently there was Jesus. Apparently there was a doll back in the 1980s called
It's Jesus in the chat.
Called Cindy. What's going on? I don't have chat pulled up. Oh, you're talking to Jesus.
Oh, I just wondered why you were referencing Jesus.
Did I reference Jesus?
Yeah.
What did I say?
Jesus.
Oh, gee. I get it.
I just love it when atheists do that.
Let's see if I can't. I think this is. Well, whatever. I don't know what video this is in the series. Hold on one second. I've got my.
If anyone is going to do MMT with Cindy, just go for it, man, and let us know what you're doing.
Yes. Let me switch over to that screen real quick. Whenever there's sometimes I don't plan on showing things, and then I end up having to show them, and then I have to. Yeah, then I have to.
Am I getting this? You're still showing it, Kelton Killer.
I just switched
my
it.
Screen.
I just switched it over because here's the thing is that we all know that the YouTube algorithm is only going to push recommendations for things I've been listening to as of late, and they're up on the sidebar, right? They're up over here. And they're really embarrassing, and so I don't want you guys to know the embarrassing music I've been listening to. Get picked on. Cindy is the sparse identification of nonlinear dynamics. It is a machine learning model that gets the nonlinear dynamics, or gets the differential equations out of the data that you're giving it, right? Yeah.
Deterministic mechanical model. Yeah.
So the question I had, okay, so here's where we're at in terms of some of the deep learning stuff that we're at, right? We're getting great results. We're on the path that we want to go on, but now we're getting into models. I mean, one of the models I was working on had like 32 million parameters, and it's just it's got like 150 features, and it's just massive. It's just a massive model. And I can tell it's struggling to, it's figuring out, it's learning, but it's really struggling to understand kind of the underlying dynamics. Yeah, it is. It is very hot.
Did you say 32 million parameters?
I did. And it learned. It likes
that all about?
Because
what,
I needed.
What?
Yeah. I decided 32 million parameters. Yeah. I built it that big. I had like eight
No.
I had 8 layers.
What?
Yeah.
What are you talking about?
I built another model for
Dude, what?
I wanted. Listen, listen. I wanted to go big. I decided I had to go big.
32 million. There's no that. I don't know. A system crash failure.
Oh no!
You just crashed the GNU Linux system here, man.
No.
How did you do that? No, you mean you had 8. You had 8 parameters.
No.
And they each had what 30 a few 100,000 time points in time. Yeah.
A parameter is every connection between every node or every neuron in the neural network.
Oh, I see what you mean. Yeah. So the internal
structure. Yeah.
The neurons. You had 32 neurons. Yeah, I don't know if they're parameters.
Well,
parameters are what you put. Parameters are what you put on the input side.
Internal
to the neural network is not really parameters. They're variables that you're tuning by the learning, back propagation, and so forth. Anyway, sorry.
In TensorFlow, they call, and in PyTorch, they call the connections between each neuron a parameter.
The parameter after you've trained the model, and it's like a static model, and then you use it. Then they're like parameters. They're fixed constants that you use. Yeah. But only after you train the model, you've frozen it, and then you deploy it. And yeah. So anyway, whatever. If TensorFlow want to call them parameters, they're okay, fine.
Then they're parameters.
Who am I to?
Okay. Anyway, I built a really big model. There's a little bit of learning, but it's really struggling to understand the underlying dynamics, right? It's very clear. It's kind of crazy actually, because when you put in, so what I'm putting in, I'm throwing the kitchen sink at it, right? I'm going to throw the daily treasury statement, every line item in the daily treasury statement, all the banking data I can collect, right? I mean, everything that MMT would say. Josh, girls just want to have fun, yeah. Everything that you would think would be data that, kind of the mainstream wouldn't look at, but that I'm pretty confident helps define where markets are heading, and it creates kind of a cyclical system, right? I mean, it gets that there's a cyclical system, but it's spending too much time on understanding the cyclicality of the system and not enough time on like predicting the magnitude of the given move. So my thought is, and this is what I've spent the better part of this week working on, is how can we combine multiple model types? And I think I've got that part down, the how to do it, but it's really something like the sparse identification of nonlinear dynamics system, the Cindy system that I have up. How would we even...
Something like it. I think your idea is quite a little, I'd say it's a little innovative. I don't know.
How would we tell the neural network? What would be the outcome? Let's say we get a Cindy model that gives us the differential equations necessary to. Because here's what I'm thinking: you build this Minsky model. I build this. We build a Minsky model that's the output is the stock market, right? Just go along with me for a minute here. And we know what the stock market looks like, right? I mean, if you go look up a stock market logo, right, it's going to be some jagged lines that has a sudden burst in the middle and it goes up, right? I mean, it's just right? I mean, there's dynamics that are at play that is very clearly, there are underlying equations that are driving that based on the agents that are active, right? And that should be able to be summarized in one of these differential or partial differential equations, right?
Yeah. We have to make it a little bit fictional because in a Minsky model, you want to have the Godly table. You want to have some sort of, conservation law applying to the stocks and the flows. And so we're going to have to make up some fictional accounts to do that. And and because they're a little bit fictional, we don't want to make them epicycles. And so what do you do? What do you do when you're actually creating, like, so you want to model a spring, a mass on a spring goes up and down, right? And then there's some sort of wind, right? So how do you model the wind? Supposing you don't know about air pressure, temperature, and all that sort of thing. So you have to create some fictional thing called wind, and then it starts to look like a really horrible, ugly, like the new Keynesian sort of DSGE model. So to avoid that, you have to have it very simple, and then you use your neural network to learn the parameters for that small fictional bit. You got to minimize it though, and so that's the thing. You can't do S&P 500 with a proper Minsky model because it's too darn complicated. How many accounts would you have to have on the Godly table? Huge number. So. I
guess
I think Douglas is right. Yeah, go ahead.
I guess my question is, what I'm trying to do is free up the deep learning model from having to even figure out that there's an underlying cycle happening there in the first place.
Yes. Yeah.
Right.
Yeah. That's the idea. So I guess it doesn't have to even use Godly tables. You can just do a dynamical system and probably that's the way. That's actually what I was originally thinking. Just use ODEs and don't worry about stock flow consistency. Although I still think it's useful because in some ways, if it's going to be an MMT model, that's got to be the basis of it. Is that the price can be pushed up because money is flowing into the stock market and out of the bond market, or whatever, or real estate market. Anyway,
so then the next thing is something like.
By the way, Douglas. You don't impugn Douglas's character, everyone. It was I peeked at it. It was Teddy Bear's futures he was trading.
It was Teddy Bear futures. Oh yeah, you saw the videos.
Don't want anyone.
My wife has been laughing at me to my expense at some of my music choices as of late. I haven't, it's not until I got into the heavy programming. I've never been a music listener, and now I kind of need it because, just having to tell Chat GPT and GitHub Copilot what to do next, that can just get tiring after a while.
It's an ambient,
So my question is, using something like Cindy, is Cindy going to give us the equations that we need for a Minsky model, or is Cindy something that can give us some data that we can feed into, a data stream that we can feed into the deep learning model that can just kind of take the weight off the needing to predict the underlying cycle?
Yep.
Which one is it going to give us? Both?
What was the question? It's a hypothesis. Could go either way.
Okay.
I think. What was the question again?
Okay. Okay. Here's what Cindy can do, right? I mean, I think just so everyone knows, just so everyone's tracking. I'm sure we're losing viewers at this point, but I find it fascinating. I mean, this is the next question. You observe the Lorentz model in nature, right? This is just you have this data. You just happen to observe it, right? That's what's happening in this top left, right? It goes into this Cindy model and it spits out the differential equation that gives you your observed data, right? What do you get to do now that you've got that equation?
Well, you get to evolve it in time.
Okay. So you
plug into the future where you don't know yet. Yeah.
Okay. So you'd plug it into Minsky. You'd get the differential equation that you could plug.
right.
You'd plug into Minsky.
Yeah, the new
Yep.
neural network learns the parameters.
Yep.
Not the freaking neural network connections, which are all just black box.
Yep.
It learns the parameters of the ODE system, and then you can run the ODE system. So the
Yep.
problem, the difference with Steve Keen Minsky is that Steve Keen Minsky just is very very macro. So so it's easy to stick in things like labor productivity, population, interest rates, and get a reasonably, it's pretty impressive how good a predictor it is. I mean, there's only few people have actually done it for an actual whole nation. So is it Pedro?
Yeah,
I forget his name. Yeah, he did it for Portugal. So pretty darn impressive. But that's because it's very high level macro, and you're not getting. It's a single price system, and so you're not getting any. Well, I guess if you call wages the price of labor, then it's a two price system. But you're not getting anything to predict relative prices, so you can't use it as a stock market predictor. So
I guess the question would be, in Ty, maybe you can even chime in on this. Again, it doesn't have to be the stock market. I mean, we can make it anything we want, but it's because the stock market,
like Lorenz is sort of toy model of the weather.
I've never used Minsky before. I've never built a model in Minsky, but you can just type in the differential equation in Minsky, right?
Yes, you can just type it in literally.
Yeah,
or use the GUI. Yeah.
So I mean, again, maybe I just am naive of how Minsky could work, but if you can take a handful of different, because all Minsky is just a bunch of differential equations that are all tied together in a big system, right? I mean, I don't want to say it's all it is. I mean, it's a hell of a system that you put together. So if you have a bunch of different dynamics that are taking place that you've identified, right? I mean, you have an inflation dynamic, right? You have a CPI dynamic. You have a rate change dynamic. You have you have all these different dynamics that are all at play. You can just work out the underlying equations based on the data that is actually there, plug those into your Minsky model, and then go from there, and then feed it the change in data over time, and it should give you the correct price path, or whatever it is you're trying to measure, right?
The only difference with these fluid dynamics guys is that they'll often be doing this for like wind tunnel testing.
And that's stupid.
So they're testing. They're testing.
That's a joke. That's a joke.
It'd be interesting. I'd like to hear you say that to their face.
Yeah. This dude,
you geniuses.
This guy has spent more years getting PhDs than I have been alive, and here I am saying the work he's done is stupid.
Hey, it's not wrong. It's not wrong. So you look at the Formula One guys. They're just doing wind tunnel. Just to test the flow. And they collect empirical data around the track, of course, and all that. But
I'm kidding. I'm kidding. By the way, this stuff is awesome. I mean, it is absolutely awesome. We are.
The thing is, though, that is what they're doing. So with a S&P 500 type model, or with Steve Keen macroeconomic model, it's quite a different sort of thing. It's an active ordinary differential equation system, because you've got to look at every month or week or month when there's a federal, or just call it central bank, not to index too much on the USA. When there's a federal bank decision or a parliamentary decision that sort of makes a bit of a radical change to the fiscal flows, you have to update your dynamical system, maybe even run the neural network again, but at least you have to update some of the so-called fixed parameters that go in there, because they're not fixed, right? They're changed by human policy. So there's no there's no equation for that.
I get it. Okay, it's always a moving target. Okay.
Yeah.
Okay.
That's a big difference, I think.
Yeah.
You have to be active in how you use these things. You can't just do it once and forget it, because the neural network, like I said, neural network isn't sentient. It's not going to be able to look up the Federal Open Market Committee meetings or have a look at the parliamentary vote records and all that, unless you tell it to, unless someone sentient actually tells it to.
You got to spend some
So
time. You got to spend some time with Copilot, because I'll tell you what, man. Some of this stuff.
no, I could easily break Copilot. No worries.
Well,
It's
you
just
could
that,
break it, but
I don't want to shatter your illusions.
I'm
Uh,
trying to, again. I think we're the ones that aren't sentient. No. Yeah. So, guy.
classical AI thinker.
I've definitely, I like Mike Norman. If we don't follow each other on Twitter, because technically we're we have competing
Matter antimatter collision.
Yeah. But if I get to 1,000 followers, if you're not following me on Twitter and I get to 1,000 followers on Twitter before, I'll follow him at 1,000, and that'll be my way I celebrate. But yeah, I do watch him, and I'll tell you what, and actually very early on in my MMT, because the thing that I converted me to MMT was that he's great. I love it. I love when his stuff gets on, and my wife can hear, and the speakers are on, and my wife.
Money. Oh, hang on. I was going to ask you if you've bookmarked any Mike Norman. They're printing money.
They're pretty, yeah.
In the Brooklyn accent. Or actually, I don't want to give the chat homework, but if anyone just happens to have bookmarked a clip of Mike Norman doing "they're printing money" clip, there was a point last week, I think, where it would be a very useful resource to have that as a gift.
Yeah, I do have a Stream Deck here that's like I can push a button to play a sound clip, so that might have to be it. But yeah, Mike was very instrumental, and he had to be, because he was the first guy that I ever heard after I heard about MMT. He was the second MMTer I ever ran across, because he's the first person to ask a question during the Bob Murphy Warren Mosler debate. He comes out there at the end and starts yelling at Bob Murphy. But I'll tell you what, I can tell you right now that based on the data that I'm seeing in terms of making predictions based on the short-term fiscal flows, I am I'd be a bit cautious at how well you can do on the short term with fiscal flows. I could be wrong on this. There could be something there, but everything I've done so far in terms of the analysis that I've pieced together is showing that it really is about a year out is the sweet spot, even with the shortest term of data, that there is so much noise during the short run, that it's hard to get any consistent predictions on the short run. I can actually, I'll try and pull it up here as we keep talking to kind of show you.
Well, you need a different model for the short run then.
Yeah, so what I did, I have it saved. I can pull it up. I see some chat coming in though. You saw Mike's comment, correct? Or Ken, you saw Ken's comment, correct? So how does the sentient view?
I just want to derail it. I want you to finish the. I'd happy to go at, but happy to go at the.
Talking AI
people.
Ty Cannon market analysis.
We're gonna have to have a whole special episode on AI and
one N as in like cannon fodder, or it's like Star Wars canon. I can bring it up though. So let me just show you. This is some of the work I've been doing, kind of hot off the press stuff. I could be wrong. Some of the stuff I'm hesitant to show because I reserve the right, let's put it that way, to be wrong on some of the stuff or go back. But I pulled in all the daily Treasury statement data, and it's a crap ton of data, right? I pulled in all the daily Treasury statement data. I pulled in all the banking data. I pulled in it all. You can see, I'm just building this just massive column over column worth of data, finally to see what the what the mutual information is as I lag the time series for forward returns of S&P 500. So when it's all said and done, here's the bank data specifically that I'm looking at, and monthly treasury statement data as well. So here's 1 day time lag. And these are all going to be, they're all relative to one another, right? So they're all on the same scale as we go down. Very little mutual information, nothing really sticking out. Here's 1 week in terms of mutual information. We got more than 1 day, but not, still not a ton of mutual information. Again, these are all relative, but this will make sense as we push lower. Here's 1 month in terms of the time lag. So again, this is looking forward 1 month forward returns of the S&P. So where's the data at today? How does that correlate relative to mutual information 1 month forward? Starting to grow. 3 months, getting even stronger. We're starting to, this is workable. This is workable. You put this in a model, and then all of a sudden, when you get to 6 months in a year, you start to see it really jump off the page. So if I go from a year forward to just 1 day forward, you can see the massive advantage that a year has for understanding what the lag is for understanding the data. 2 years, maybe even more, and then we start to go back down after 3 years. So I would be a little cautious as to what you can really figure out day in and day out. I'm not trying to say there's not anything there. And I'm not trying to say that like it wasn't obvious after the massive COVID spending that we were going to have one hell of a ride on the stock market. Yeah, I actually think it's about 18 months, a year to 18 months is probably about where it's going to land, where we start to kind of curve down. Maybe up to 2 years is going to be the sweet spot. It doesn't. The other thing too is that doesn't necessarily mean that the model is going to work best 2 years into the future. It just means that's where the most mutual information is. The next test that needs to be ran is Granger cause. So it's kind of the reason you would do this step is one, just to make sure that you have data that has some correlation there, right? That's robust. And then it sets your expectations for what the learning model should be, right? So if I run the learning model and all of a sudden I'm not getting anything out of the year, but I'm getting a ton of stuff out of the stuff next week, right? So the next week model is just kicking the year model butt. I need to go back to the drawing board, right? There was something way outside of my expectations. So it's not to say there's not going to be anything there in the short run. What I'm saying is these flows, and this is now the second huge model that I built using flow similar to this. And the unemployment model is very similar to this. 6 months, a year, 2 years seems to be where we're at. In terms of peak mutual information. So don't overread this, but also it shouldn't be neglected either, dismissed either. There's something that's happening.
Right.
I don't know how to explain it, but
that means if you can predict a year ahead, you can also predict
tomorrow,
a minute ahead.
Yeah.
You just re-gauge it. Yeah.
Mm-hmm. Yes, you might not fully understand. I mean, it might be a hell of a ride to get to the next year. I think you're right though, Guy. I think it is important. And it's one of those things where, I'm gearing up. I told Bijou the other night, I'm gearing up. I'm getting some cash pulled out of some accounts. It might take me a couple weeks, but I'm ready to start betting on the next model we create, because it's feeling close to being more powerful than the BIS model that I have right now. And that is really, to me, I'm not going to put a dime on this until I feel that it is going to be more consistent than the BIS model that I already have. And I think we're getting pretty darn close. So when I was building the BIS model, the big gag that I had running that entire time was that it was the Death Star. So this is this Death Star from episode 6, the bigger, the better Death Star.
Ooh, Star Trek, wonderful. Yeah.
Yeah.
It's the best metaphors.
It really has good metaphors. Yeah. God. The force is not strong with this one, man. It's
full of wisdom, that Spock. Excellent summary. Thank you for that.
So yeah, that is, I mean, that's where we're going. It was also this model too. I mean, this is all the data that I put in the new model where I'm like, we have to come up with a different approach. I also have another model that's completely separate from this, for something else that I'm working on that also needs multiple inputs. So it's the path that we got to go, going forward. Ty, I like that, man. I appreciate that. I actually don't think Warren disagrees, to be honest.
You got the torch there?
Yeah, so
I need proof.
I'm holding it.
I need.
I think here's the thing. This is my own take. I'm happy to keep kind of debating, and don't get me wrong. I will play along with neoclassicals or the monetarists that come into my chat and that sort of thing, but I'm past the need, the need to prove any of this, and I really to anyone else, and I really just want to get into, the fun. And to me, the fun is using these awesome. I mean, they're still using models, as someone's been tweeting out some just banger tweets as of late. These memes about, hey, I got this shiny new model. What should I do with it? It doesn't look anything like my model from the 1890s. How do I use this thing? We've got these awesome tools that we can be using, and no one's using that. No one even cares. That's the sad part. And I hope with some of the stuff we're doing, we can at least attract attention to like, hey, there's cooler tools out there than a ruler and a pen.
Also, how about shouting out? Like, I don't know if the others in the chat know, but like Steve Keen has said that Ty Keen's here is the greatest exponent of the Minsky software in the world. I mean, I know Canadians are a little bit humble, like Kiwis, but so maybe I have to say that for Ty here. But
I do like that stuff, man.
There's a younger generation out there, and so pass the torch on.
Ty, I will be getting into very soon. I will be getting into Minsky, and then you and I can get together and do some fun things together. And I do got to get back with you too on some data as well. So, anyway, those are my thoughts. That's where I'm at with the data. This is going to take a while, but those are my initial thoughts. There seems to be a sweet spot, a year, 18 months, maybe 2 years down the line, for some of this stuff. We'll see. And again, some of the stuff I could have written some code wrong. I'm sorry. Chat GPT and GitHub Copilot could have written the code wrong, but I'm pretty confident that it's all right and that I'm interpreting this the right way. So it takes time and it makes a lot of sense, right? I mean, there are a lot of dynamics that take place, and I think the flows get shown the most a year. And when I've made other kind of charts, just simple correlation charts, it does seem to be about it. I mean, my interocular test would have told me that probably the sweet spot would have been 6 months to a year. It turns out it was a little bit more. But that's kind of where I was at in my personal guess.
Great, man. Natural born.
Teddy Bruschi, my favorite fact is the former Federal Reserve official said that the Fed has no reliable theory on inflation. Yeah.
All these people that come out with statements like that once they're retired. It's like could have done with some help while you were there, buddy.
Yeah.
I mean, but Warren says the people there, a lot of the staff do know it. So.
That was, I think, that was a really interesting part during our conversation, is just how confident he seemed to say that it's a known entity. They know what they know what they have in front of them. They're just unwilling to pull the trigger. They're unwilling to do. Yeah, it kind of is like that coach analogy that I had, right? Where it seems like right now they just know, hey, the rule is we play every kid for the same amount of time during the game, right? That's just, Johnny gets as much time to play as Tommy does, and Tommy gets as much time to play as Adam does, and Adam gets as much time to play as Susie does, and they're all going to play 8 minutes during the match, right? Otherwise we're going to get yelled at. And they're so afraid of the parents yelling at them in the stands that, Susie didn't get as much playing time as Tommy.
Yeah.
And that seems to be the analogy that's really at play here, is the Fed If they finally came out and said, nope, you know what? Your son, Tommy, he sucks. He's not worth crap, and I'm done losing. I'm sitting Tommy, that they're going to get yelled at, and the egg's going to be on their face. That's really what it feels like.
Tell you what's weird though. It's like, it's America. So you see, in other cultures, Asian cultures, you get a lot of this gring jai and stuff, face saving. So you just cannot back down. You cannot back down, or the harikari or the cuckoo or something, kicks in, and you're just an outcast. But this is America, man. America is not afraid to speak, to like say completely wild, crazy things. But you've got this professional managerial class or whatever, or the middle class. They're very tight, and they do have this huge face saving aspect to their psychology. So they're not like us, prepared to just go out on YouTube and just say whatever they feel. Yep. They're definitely playing games, and it's tragic because it's hurting real people real bad.
Yeah.
And I don't think I'm up to actually going on the unemployment rant today, but feel like sometime I have to. It's not related so much to investors, but it is because what really drives the economy is labor. Mm-hmm. And no matter how much machine automation you got, I don't care. You got to have humans pushing the buttons and looking after each other, and that only helps investors, right? Not the rentiers, but the actual investors who are interested in putting their money into good use. And so it's like tragic. And it also, I knew the story about the Romas before, but when Warren said it was on the live stream, and I was trying to impress upon everyone that there's this division between like the managerial or boss classes and the workers, the actual operations people, and there's a sort of a communication gap between them, and then when he mentions the Romas, I'm just like, oh yeah, it's worse than I think. With husband and wife, they're just
inside the house.
Inside the house. Inside the house is the division of one side of the family knows monetary operations, the other side doesn't. Telling neoclassical bullshit story. That was that again is like your coach analogy. What can you say? Just keep educating, keep up the work, everyone, and keep talking to your friends so that at least within your family, everyone sort of understands what the true constraints on government are.
Guy is a good point. You do have an advantage. The difficulty is fully realizing that advantage. And understanding where the risk actually is, right? I mean, the difficult part with trading is really understanding the potential risk that you have, and where those risks come from. Not only as kind of the real economy plays out and various shocks hit the system, but then also, even the dynamics in the market as those play out. There can be risk. I mean, we're seeing that right now play out. Huge bets have been made that are kind of self-fulfilling prophecies that are that have pushed the markets lower, mainly because Carl Icahn just thinks that the market should be going lower. He made some multi-billion-dollar bet that the market should go lower. Well, when you do that, you actually push the market lower. Right? It's kind of a crazy self-fulfilling process that takes place. And so the way that I've figured out how to take advantage of kind of not a mispricing, but just where the future price of the S&P 500 a year and a half from now, based on what I've been able to calculate, is determinable. I mean, it's an equation that you can just work out, right? But it's the wild ride from here until a year and a half. It's just difficult. Admittedly, it is difficult. And in the meantime, you can get the last 2-3 trading days that have played out where you drop 2-3%. And the way you kind of exploit this is you exploit it via leverage. You get long, and in my case, I'll use leverage, and it sucks when Carl Icahn, who, if you would listen to his most recent interview too, it's terrible. He's like, these rate hikes are going to destroy the economy. It's only a matter of time. So I'm betting that, this is going to be a bad thing. And it's a self-fulfilling prophecy. The hedging activity that takes place, the dynamics that take place, the dealers are forced to sell, and that creates the selling that, drives that. And eventually, he'll either take his profits or take the loss on his massive position, and the market will just, fire off on a 5-10% rally, and that'll eventually happen. But that's the trick, is you have to have a time horizon that says you're willing to sit through the volatility in the meantime to gain the advantage. Otherwise, a passive investing approach until passive investing blows up is really a good approach.
Yeah, definitely contamination by prediction and so forth, and psychology. So MMT only gets you so far, and that's why it's useful for the aggregates and the indices. Maybe even the Nasdaq. I don't know, but
yeah.
Because it's macro, and MMT doesn't tell you what the relative prices are. They can be frigging anything. Okay, so MMT tells you what the price level is in the economy, like through because it's a monopoly system. Currency is a monopoly. The tricky bit of that is, I think maybe Sam Levy and others are looking into this, but it's not really a done thing. Is that how do you really get a good estimate of the price level? Because one side of it is the collateral that is demanded for the credit. So it's easy. It's an easy job as far as the fiat issue goes. You just look at all the payments that government is promising to make and so forth, and you can get a good estimate. But the bank credit is dominant, and that is all determined by collateral. And who on earth is ever going to be able to model that? And so that loosens up a whole lot of prices, relative prices. And MMT can only give you the absolute price level.
Okay, I actually do think, I gotta jump in here. I actually do think that's where Minsky steps in, though. Everything I can tell, there seems to be a very predictable time cycle for whatever reason. I don't know why. I mean, but it when you start digging in the data, it's like, God, there seems to be this 18-month cycle on this stuff, and I don't know.
Well, because the relative prices are pretty strongly fixed, right? They're not terribly changeable. Yeah. It's only like fictional asset prices. When I'm in fictional, it's not a real good.
Yep.
That are a little bit untethered and are subject to massive volatility. But like apples or teddy bears futures, they're going to be pretty stable. Well, not the futures, not teddy bear futures, the teddy bear price. It's going to be pretty stable. Yeah. Sorry, interrupted there. Sorry about that. So yeah, Minsky model can get into relative.
I mean that sort of thing. Yeah, I think it can start to give some underlying. One of the things that's always going to be hard, and you can only ever predict it statistically. You can only ever give statistical boundaries, right? I mean, you're never going to know when Carl Icahn's going to wake up and place $1 billion bet, right? I mean, that's just, you're not going to know that. You can only statistically approximate the range at which price could go given that outcome at any given time, right? But I do think drivers like the massive expansion of credit that we saw post-COVID, I think you can get a understanding of when that is possible and likely to kick off, right? And I think there's an underlying dynamic system that's causing that ebb and flow that has probably some differential equation that I would imagine you could solve for using something like Cindy to at least approximate that cycle. Those are my thoughts. I don't know.
I think we get a lot of predictive power also out of just a two-price model, one for asset prices and other for real goods and commodities. Or three-price labor. I'd always probably put labor as because it's labor is the predominant way that labor and welfare payments is the predominant way that government injects currency or sets the price level through what they pay for labor mainly. Wow. Um,
Anyway,
we, yeah, where were we going here?
I don't know. I don't know now.
Wrap up the topic or something?
Yeah,
Answering a question?
we can go questions.
Uh,
I have someone at
there are
my
quite a few
office
things that we're
door,
not going to
but
get to
yeah.
tonight, I just realized.
Why,
But
why don't you riff for a while? Give me 1 second to
can I riff?
yeah, what do you want me to
Okay.
do you want me to put up your you want me to put up your screen for a second, or
Yeah, you could do it.
do you have things?
Since we're probably now at the fun half.
Yeah, we can get in the fun stuff. Yeah, we're 2 hours in at this point.
Well, we'll go back and forth maybe if we can, because there's still stuff to talk about. When you sent me that Twitter thing from that Hillary aggro, was that something for tonight, or is it just between
we can?
you and me?
Yeah, no, we can. Yeah, if you want to. Yeah.
Okay. Do you need to take a break?
Nope. What needed to happen just happened.
Yeah. Okay.
So we're good there.
I don't know. Well, anyone who didn't listen into last week's live stream, yeah, it was shorter than our normal because we had Warren. We had to respect his time, but also we did get onto some fun stuff. So have a look at how Warren solved unification of the forces of nature by gauging gravity.
Yeah,
pretty decent. I did a blog article on that. Well, actually, on some of the thoughts of famous physicist Leonard Susskind, and I managed to weave Warren into that, so that was kind of cool. Just check it out.
Oh shit! I haven't. Hold on a second. Yeah. I never hit the transition button to your screen. There you go. Sorry.
Okay.
Now your screen.
Well, I hope there's nothing embarrassing on this one, but
did you want me to switch it over? I thought that's where we were.
I don't know.
Okay.
I don't know if we need to.
Okay. Well, it's switched over now.
This is like the category of some things I've been reading. Okay, so it's not an official Oprah segment, but some things I've been reading. So I do help out and volunteer, and I come across these venture philanthropy types and that. They're good people. They want to put investment where it has good social impact and all that. But I tell you, because they don't understand MMT, I think they're misusing a lot of the donor funds and that. Well, not necessarily misusing them, but not using them in the best way. Because to them, it's all about, we've got to have return on investment. And whenever they say monetary return on investment, I'm like, dudes and girls and guys, you're not doing philanthropy, right? Philanthropy is you give something away. So if you're expecting a monetary return on investment, you're an investor, but you're not doing proper philanthropy really, because you've got to understand that you can have a monetary return on investment if you get the social returns as well, and if the social returns don't come with a massive social costs. So, for example, if you're say you want to invest in some solar or nuclear or something like that, and so you give this community some resources, you invest some capital, they grow the plant, everything's working, they've got a company that, okay, now the company has to sell the electricity to that community. And so where does the community get the money to pay for that electricity from? So if it's not supported by government fiscal, Mike Norman here, you're not going to be able to, you're going to put people in austerity. So you created a great renewable source of energy perhaps, but you're still running austerity. And these types don't understand it. Two other things. Well, one thing they do understand is greenwashing. So it's always good to see people that are out there calling out companies who claim they've got green policies, and that's just all bullshit. But the other one is this B Corp. B Corp is this organization that certifies companies that are ESG or whatever. Environmental. They have some sustainability metrics. Blah blah blah. Turns out this is huge, open to fraud and all that.
I can only imagine. Yeah.
And I don't want to depress you by going on about it. Just bring it to you guys.
No. It's not depressing. This conversation came up.
Be an investor. Be a smart investor. Have public purpose in mind.
This conversation came up with me and my friends, my little friend chat group that I have. We talk. They get annoyed when I talk about this. I can tell, but you know what? They brought it up because they posted the tweet about Bernie Sanders wanting a 4-day work week, and this gets into some topics. This gets into some bigger topics, but it was the 4-day work week, and I just I don't I don't care if we have a 3-day, a 4-day, a 5-day, or a 6-day work week, whatever, right? I don't care what that number is, but I don't think that we should be, and this will connect eventually to environmental friendly investing and all that sort of stuff. You know, companies trying to be environmentally sound, which I think they should be, but I don't think that it should be the onus of the private sector to. I don't think it should be the government that tells the private sector the boundaries that it can have with employees who willingly enter into some sort of contract to work with them, right? And so, to me, and this is particularly why it bothers me when someone like Bernie Sanders tweets something out like, a company should go to a 4-day work week, because he should know better. He should know better, and he should know that it's really a job guarantee that solves the problem, right? Because if the job guarantee always worked, I mean, let's just say the job guarantee was a 35-hour-a-week job, right? It still gave a base salary. It was 35 hours a week, whatever, right? You know, you got a half day on Friday, right? Then that means that's not only in terms of the time, but of the price. They're setting that, right? I mean, they're setting both the time and the price that the private sector now has to, if they're going to pull you away from the job guarantee, they're going to have to offer something that's even more enticing, right? And then all of a sudden, and here's the thing too, here's what this solves. This solves a lot of things. You know those companies that, you know, they used to call them unicorn companies. It turns out they were just zombie companies. It gets rid of all those, right? I mean, it helps. It helps to hold that back, right? The other thing it does is because one of the things my friends brought up is like, oh yeah, I can't wait to return to the 1970s when corporations were cutthroat and they just dumped all their trash into Lake Erie so it would burn on fire. That happened. The entire Great Lake, I mean, a huge section of the Great Lake caught on fire. So, but to me, and this gets to the sustainability, corporate sustainability. We've made corporations so massive in this country and so integral to employment, right, that you can't you can't serve a punishment big enough to something like a General Motors.
But wait, haven't you deindustrialized?
Well, the U.S. we've moved our.
You've got no industry there, apparently, according
to
the Twitter sphere.
Yeah.
Sorry. You're absolutely right.
So you
created these.
These massive corporations that, if there was a job guarantee, if you had to really throw the hammer down on a company that was truly causing ecological damage that needed to get taken care of from a government standpoint, you can throw the hammer, and you're not going to put 500,000 people on the unemployment line, right? Because there's a job guarantee. And so it took me a while to get there, but the job guarantee is the solution in my eyes, and I think it solves a lot of the issues. But I'll digress. On the job guarantee.
Okay, but it's back. That's so great. I mean, but you've reached like saturation of MMT once you get there, so that's great. So then you got the hard problem of MMT, which is getting the political stuff made. Even if we get pitchforks out and overthrow the government, hard problem of MMT remains.
Okay.
Yeah. How do you get a bunch of anarchists to realize, we need a job guarantee. We need something called money, maybe.
Here's how you do it.
Maybe we need banks.
Okay. Here's how you do it. The first thing you got to do is you got to convince the right wing. You got to convince the Austrians. The Austrians are way closer to MMT than I think people realize, and I think they're convincible. And here's how you convince the Austrians: you explain to them that it takes far more government to have a reserved backed currency than it does a free floating currency. It takes far more coercion to have a reserved backed currency, because not only, right, to have a reserve backed currency, have a gold backed currency or something like that, you have to conscribe men and women at their, at the height of their physical abilities to go dig a hole out in the middle of California to find gold, right? Just so you can supply the necessary funds for the private sector to work, right? So you explain to them that those people don't have to be coerced to do that. They can just go work in the free market if they want to, right? They can just go work in the private sector if they want to. And it's easy. You're not coercing anyone, right? There's actually, you actually have more freedom in an MMT setting than you do in what would be a very coercive setting. I mean, essentially like we saw, before the Federal Reserve came around, right? So I think they're the easy ones. The difficult one, the difficult ones are the Marxists, and they're the other side, the socialists, the Marxists. That's the video that I sent you earlier today.
Oh yeah. Sometimes I don't know, man. I think the Marxists. I mean, there's a lot of MMT Marxists.
Correct.
Marxists than Austrians.
Oh yeah.
So
MMT
Marxists are really great people, but so are the ex-Ron Paul. I mean, our friend Steve Grumbine is the ex-Ron Paul libertarian. So I mean, they're both really good. But I reckon, I think you're right about all of that. But there's not much difference between an MMT Austrian and MMT Marxist. There's not much of a difference in convincing them. It's a different project to convince them in each ways, and that's why Warren is good, because he actually says got to be careful about appealing to bleeding hearts, because it doesn't work.
Yep.
Why doesn't it work? Because most people don't have that mindset. They have in America Protestant work ethic type mindset, and more inclined to individualistic libertarian type ideas, I guess. I'm not sure. I mean,
or we're all just bleeding hearts, but we're bleeding hearts about the things that are closest to us. And right.
Yeah, that's a fair way to put it.
I mean, I think back when I was a libertarian, I think a lot of the libertarian types, sincerely wanted what was best for those around them. Yeah. Right. I mean, it just turns out that those around them were the business owners that were exploiting the workers. But
weird.
I mean,
it's really weird, because that actually was the history of neoliberalism, right? The Mont Pelerin Society and all that came out of von Mises and Friedman and all this gang. Hayek. They wanted to make sure there was never going to be fascism in Europe again. Yeah. And so they wanted a kind of an Austrian style, morphed into neoliberalism, and it's because they didn't understand the monetary system.
Yep.
And so their hearts may be in the right place, you could say. Irony. History is that neoliberalism leads to fascism.
Yeah.
It's the whole austerity mindset that gives people like freaking Hitler power, and populism, fake populism, as Thomas Franks said. Like, it's fake populism, but it's popular. And because you've just gone out of neoliberalism and austerity, and you're desperate for someone to punk the neoliberals and liberals. And so so the hard problem of MMT is not the Austrians or the Marxists. The hard problem of MMT is the neoliberals.
Yeah. Well, they're in charge.
Because they have the power.
They're in charge. Yeah, they're in charge. But okay. Here's the thing: if we can get 51%, right? So I mean, let's just say MMT. Let's just say heterodox. I mean, let's just call ourselves.
You're gaming this now. I like it.
The heterodox is about 25%, right? The socialists are, heterodox would be about 15%. Socialists would be about 20%, and libertarian, I want to call them rational right-wingers. I hope you get the distinction I'm trying to make. There's some in the right. There's some in the right wing that I don't want on our side, unless they, unless they fully disavow some of their own.
Yeah,
You get what I'm saying.
Right-wing politics is not a monolith.
Yeah, you get what I'm saying, though, right? I mean, there's part of the right wing that I think is a sincere belief that's just pointing the wrong way. I think you could combine powers and get about 55-60% majority if they can just reframe their understanding a little bit. Actually, what I have up on the screen right now, I don't know if you're still watching the stream side. This is what I sent you, and I think this lady's a socialist, a Marxist. She had a whole YouTube video, but this tweet popped up, and I don't mean to. Again, I'm well aware that I have two followings. I have the following that is following me because they like my market insights, and then I have the following that's following me, especially on Twitter, that likes the MMT insights, particularly. I mean, a lot of socialists, kind of Marxist type that are following me. I don't mean to offend, but when I watch a video, and I'll play you this 44-second clip. When I hit play on this too, everyone, just someone hit thumbs up if you can hear this. Not thumbs up on the like, hit thumbs up on the like button, but just put it like, I can hear it when I hit play. But she's very nice. I get what she's saying. I don't like the exploitation of workers. All of that fits. I get that. I just don't think the socialist answer is the right thing. So let me play this. Bijou, did you get a chance to listen? Because I don't think you'll be able to hear it.
Yeah, I did.
Okay.
I think I did, yep.
Okay.
I wasn't quite, okay, go ahead.
Tracking, but I'm going to play this for everybody. Let me know, everyone. Again, it's 44 seconds. Just put that you can hear it once I hit play here. And if you can't, then I'll figure out the audio.
What are you going to do? You're just going to say, well,
I got to restart it.
What are you going to do? You're just going to say,
I'm on the Google Meet, so I'm not going to be able to tell you. Maybe I could switch audio.
No,
hang on.
You and your buddies and your cousins, whoever's there, whoever feels like it and enjoys that kind of work, is going to get up and go outside and chop some more wood and bring it in for the fire so that everybody's warm. And you know what? It's not going to feel like work. It's going to feel good. It's going to feel fun because you're doing it along with somebody else, because social work, when it's for a good purpose and to help other people, and you're not on an extremely rushed timeline like the way that we are in most jobs under capitalism, it's enjoyable because you're doing something fulfilling, something meaningful, and something social. What if you need to cut? What are you going to do? You're just going to say, well...
Okay, so that was her YouTube video, or there was a clip from her YouTube video. Will people still work if there's no capitalism to make us do a job? Now, she goes into a very kind of Marxist, socialist understanding of the exploitation of labor in her YouTube video. I mean, it's worth listening. But I was thinking about responding to this on Twitter, because I think this is pretty much what I constructed when I went to respond to this on Twitter. She's not talking about work. I mean, technically going to chop wood is work. But work is, going to work for a wage, right? I mean, that's what you're doing it for, right? I mean, technically getting some firewood for the night is still work, but not in the way that when I say I go to a job, you know what I'm saying. The reason you know what I'm saying is we're all fighting for these dollars that are ultimately used to pay taxes, right?
This is classic Moser and Mitchell. You'd be working hell of a hard on a farm for no wage.
Yes.
So it's employment is working for paid for the currency.
Yep.
It's not work.
Yep. So I think that is, really she's conflating, work with a job. And I think, and again, when you listen to this, I agree. If you don't want to partake in the system of private enterprise, she's conflating survival. Yeah, that part is kind of the tweet, right? I mean, that's the tweet. There's a conflation that's occurring there. But if I give her the benefit of the doubt, right? The right thing, the job guarantee solves it. That's what I'm really trying to say. Something like the job guarantee solves this problem, right? Because then if there just needs to be a wood chopper, right? I mean, if there needs to be, if wood chopping is something that we decide needs to happen in this world, and the government wants to supply that, it can supply that, right? It can do that. And Guy, you bring up a really good point. The free riders are going to ruin her world. I mean, communes, there is that issue underlying it as well. But the real exploitation.
If we go to full UBI,
right?
Everyone's going to have to understand what that means. Is that we're going to get a lot of e-gaming until the computers stop working.
Yeah. Yep. But I think the sensation that she's feeling when she talks about the social work, and the sense, that sense of community with your work. One, I mean, I I do what I'm doing with this YouTube channel, with the Patreon, to gain a wage, and I feel like I'm benefiting society doing it, right? And everything I'm doing is private enterprise, right? I mean, it's the definition of capitalism, right? Well, not the definition of capitalism as some people define it, but it's part of private enterprise, right?
Private enterprise, that's all it is. Yeah. It's not capitalism.
But I still feel everything that she's saying. I mean, I'm doing it to make a better world. And I think and again, I really think this issue gets solved when you understand that the issue gets solved when you understand that you're all fighting for the tax credit. I mean, that's what you're doing. You're fighting for the tax credit.
I've had similar discussions, but only on the, what is money and the MMT sequence with a guy who's professes to be an MMT, or at least, apparently on Steve Keen's school.com course that he's running. We've gone back and forth, mainly on just language framing. Like, does the sequence begin with imposition of tax liabilities, or does it just begin with the government spending? And I'm like saying, he's saying, well, people will reject MMT if you start with the imposition of tax liabilities. And I'm like, well, I'm just echoing Mosley because I'm the sentient mind of Mosley living in the basement. Growing. I'm like a 9-year-old. Yeah. And I'm like, well, you got to be honest. I believe in an informed electorate, to quote Warren, rather than an ill-informed electorate, ignorant. And so, even if it's a harsh truth, you got to tell the truth, because otherwise you're just going to undermine yourself later on down the line. Yeah, and that's the whole thing about the tax first then spend, is it totally undermines your story. But the tax liability first and then spend makes a whole lot of sense. And I just feel sorry for people who think that that's horribly coercive and evil. It's like, how else are you going to do it? Give me an alternative, gold. And then you can have a conversation with them about how terribly regressive gold is. But eventually
someone's going to be in power with bigger guns than you have. I mean, that's just how it's going to be. And democracy is a great solution to that problem.
I mean, gold is piracy. Gold is just like, okay, let's encourage piracy. In one form or another, it can be the CIA or whatever, and that's what it's going to be, whoever the biggest guns. Whereas democracy is served best with a currency that has no intrinsic value. Can't get any better.
I mean, the intrinsic value is what your society has to offer. I mean, that is the intrinsic value of the currency, is the society itself.
You get to decide what the price is, and what you're prepared to pay labor for in return for contribution to society. So I think those lefties and Marxists and socialists have half the story right, just like an Austrian might have half the story right. And it's like connecting the dots. But you see, the thing is, here you've got to be very careful with your tweets. Because do you want to just piss them off, or do you want to bring them along? If you want to bring them along, these are very sensitive types when it comes to the word work and the word job. So instead of job guarantee, you got to say social contribution.
I like it.
Social, socially responsible contribution guarantee.
And that's it. And here's the thing. There are arrogant pricks out there that are just that deserve, that Brooks guy, or the there are a few others that deserve the wrath of the wrath of my trolling, right?
And let's face it, they could probably take it.
And they don't care either way. I mean, they're so their head's so far up their ass, they're not going to listen to me anyway. Even if I did show them, the equation that solves it all. But I mean, a lot of definitely listening to that lady's video, she seemed to have some sincerity about her, and at least a bit of So yeah, I wouldn't, I'm not looking to troll that type of person. But it still kind of rubs me the wrong way, just a little bit, because a lot of conflation there. And here's my final point on this, because actually I really want to get to what Josh just put in the chat and see if you can speak on it. But no matter what, I mean, this is just going to be my rant on this. I think I've done this before, but if you want something in life and it is a scarce resource, and there's going to be a competition to get that. That is just whatever that is in life. Now, if it's not a scarce resource, if it's just time with your family or something like that, that's yours to have for as long as you have the time with them, right? But if it requires success to achieve what it is that you want out of life, that means there will always be people that are willing to work harder than you to get that. And that is no matter what it is, no matter if it is, to a certain extent, I feel the pressure of an arms race to answer some of these deep MMT questions. And I want to get there first, right? That is something that I want to accomplish for my own ego, for whatever reason I might have. It's something that I want to accomplish to solve this problem. And that means there's other people, because it's a worthwhile endeavor. Only one person can get there. There's going to be competition to do that. And the person who works the hardest is going to get it. And I don't think that is a message that should, it's a message that needs,
a bit on that.
Yeah, go ahead.
Yeah. So my old man, God rest his soul, is passed away, but he was a big chief executive and so on, also a member of parliament at one stage. So he, in some of his corporate stuff, he was doing these organizational psychology retreats and things, and this was like really big, high level, like sort of like Booz Allen, Goldman Sachs type level stuff. In New York somewhere. But anyway, he did that, and it was interesting, really interesting, because I read some of the stuff that they were given, and they get these tasks, and I know it's only a laboratory, in a workshop, and these executives are supposedly not the psychopath types, they're actually really good.
Yeah. Some of them,
friendly capitalist. It's like, I mean, I know percentage wise most of them are psychopaths, but these are good people, and they do these things. Okay, it's only a lab experiment, but I can really believe that this does translate into the real world. So they do these things like, they're making like paper darts, and the competition, right? So the team that gets the paper dart that flies the furthest, gets a little gold star.
Yep.
So these psychopaths, or these who cares about a gold star? It doesn't matter. It's the peer recognition that, you guys won the competition, our fake competition that has no meaning.
Yep.
It still like motivates them, and it's still really awesome. And my dad's team, as it happened, won, and they did a cooperative model. All the other guys did a competitive model. So they were competing with the other, it's sort of individualistic. And my father's team were cooperative. They were the only group that decided to make the paper darts cooperatively. So yes, the competition is really important, and but the cooperation is just as important. And it's where you apply, use the tools fit for the task. Anyway, sorry.
No. I don't think we disagree that much on that. I think my point, my larger point is, if you go down the socialist path that says there shouldn't be the exploitation of workers by the capitalists, right? And that, your life shouldn't just be, you shouldn't set up an economic system that just allows the constant exploitation. I'm on board with that, right? Like, let's not set up a system like that, right? Jobs guarantee solves that, right?
Yeah.
Right. But if you go down the socialist path, that is just, I should have some sort of right to be a grifter, or the 4-day work week should be the thing that it is, and that I should still get everything out of life that I would want had I been willing to put the effort in.
UBI crap.
Yeah. I mean, that's kind of where it falls into. So, and again, I don't know if that lady. I mean,
these UBI type socialists really rub me the wrong way, and they're just. I think it's, are you ignorant or are you frauds? And I'll just take the Mosler option on that and call them ignorant.
Yeah. I did want to bring up,
if they're prepared to listen to us. Then,
Go ahead. I'm sorry. I was.
Oh yeah, because there's just a little subtlety there. So, thing is, not just the job guarantee from MMT, because you've got a public purpose. If someone's doing a public good job like cleaning the streets, should be a public sector wage, man, not a job guarantee. And but if someone doesn't want to work for the government or doesn't want to have a boss looking over their shoulder, but they want to clean the streets, then it can be on the job guarantee schedule. It's just that it doesn't have to be. You can get a higher wage and benefits if you work in the public sector. So you have some oversight, blah blah blah. So you can have that sort of freedom. But that's the thing, you see, public purpose. What is it? It's what society wants to achieve with their currency monopoly, and so the monopolist can always determine how the wages are structured. And if you want decent janitorial work, grotty work, or what my brother would call grot work, what David Graver would call shit jobs, right? It's socially necessary jobs. If you want a decent society, you can always pay those people a really high compensation. And maybe, they instead of a 15-hour work week, they can have a 10-hour work week, whatever you need to do to motivate them. And so, I would be happy doing grotty work for a decent wage.
Yeah.
And the point is there, it's not a market determined system, it's socially determined. And I just think a lot of well-meaning leftists don't get the idea that, we've got a monopolist here. You might not like the word. Actually, that's one thing, isn't it? That like Marx is socialist, Austrian, and neoclassics, because neoliberalism, almost everyone has in common, right? They all hate
monopolists. MMT, is the one that realizes.
All united against the MMT.
Yeah.
Oh, no.
Maybe that's it. Maybe they hate the idea that. Yeah, really, they hate democracy deep down.
Once you understand what you can do with your policy base, you can make janitorial work, which just makes life so much more pleasant for everyone. You can make it really highly well compensated,
highly valued,
as it needs to be, because it is not a market commodity that you want. It's a socially sort of necessary thing if you want a kind of a decent society. Anyway,
Ty coming in with the I mean, that's a good point, guys. Live stream done. Larry Summers, follow him on Twitter. I need say nothing more. Josh put up earlier the way Pavlina explains job guarantee. Speak to her if she focuses. I think if she focuses on the human elements to work. Have you ever? I've never.
Yeah, she's good.
Okay,
what's her Trineva?
What's her point? With the human.
She wrote the case for the job guarantee, and is probably the expert on it as well as Bill Mitchell.
Okay.
And they have a slightly different concept to Warren. But I have to say, I think Warren's correct. sorry, all my lefty buddies. Thing is, it should be a transition job guarantee, at least in the USA, just because you have massive resistance to socialism. So I always say, if you can educate your young people without brainwashing them, just give them decent knowledge, and they all become socialists, well, then you've got a socialist country. But you can never impose something good by force, except the tax liability. so let me have that one little loophole. Please give me that one.
But what's her thing on the human elements to work?
Human elements to work? Well, the thing is, actually, probably Josh should better explain it than me.
I found a few videos that popped up, so I'll take a listen this week.
But it's a general concept that work performed in the spirit of public service is more than just a job, and it's like Keynes. It's the more Pavlina is a good Keynesian. She understands Keynes forward and backwards, like Bill Mitchell. It's like the more people are doing useful work, non-bullshit jobs, the less everyone has to work. And that's the basic idea.
Okay.
Reciprocity in that. But it is a leftist MMT school, because they slide and slip. I think not deliberately. Maybe it's just a bit of their language. They slip a little bit into the job guarantee can get us good things. Okay, no. Or yes in a way. So job guarantee allows people to fall out of private sector work or public sector work, and do sort of cool things like getting trained, doing their own little contribution to the community. It can be very broad, so that you can almost do anything you want on a job guarantee. That is sort of can be resourced. So if you want to, go and clean up the local library, well, you can do that. But if you don't have a local library, you can't do that.
Yeah.
And if you want to go burn down houses all day, then you can't do that either. So you sort of tell people, like, things that they can do rather than things they can't do, because they'll always invent crazy things if you just with their imagination. So you have a sort of a schedule of things, and it can be very sort of abstract, like work for a recognized charity.
Yep.
And that's like, that serves a public purpose, but without having it sort of dictated by government. So, but anything you want a decent, really skilled wage for cannot be on the job guarantee. It undermines the job guarantee. You want it to be a proper public sector wage with a skilled wage rate. And if the worker does not want to work for the government because they think the government is evil, it has to be act like a transition job guarantee. So you don't want to kill off the private sector by having government outbid them for every damn thing.
Everything. Yeah.
So it's a mixed economy, and like neither the capitalists nor the socialists are right.
I mean, that seems. I mean,
understand you live in a society. There's all sorts of opinions on things.
That seems to
hold
be
a person's gun to their head and say, "We've got communism now, buddy. It's going to be great for you, by the way."
That seems to be the.
I personally would have not much of a trouble with that. Like, give me Star Trek communism, but it's not for everyone. So you can't have it for everyone, because we live in a society. Even though Thatcherites say there is no such thing as society, but they're the most lunatic of all.
It seems to be the trick, and I mean that's really where the political discussion should be. I mean, I look at the story that Steve Keen tells about Australian internet that they baked it in when it was only 60 megs a second or something like that. Now everyone has shit internet. Because as the story is told, right? But I mean, at some point, the risk is always going to be that the government takes over an evolving industry far before the private sector has allowed for the creative creation and destruction of technology, right? And so I know I think the story goes, they insist on everyone having broadband, so they built some 60 meg system or something, 6 meg, I don't know what it was, something that far is far too low for the 4K streaming, and so everyone in Australia now just has subpar internet. And
that's a policy mistake. It's not really socialism.
I'm not saying it's
like government not understanding its proper role.
But that's what that's what I'm saying though, is that at some point, right? At some point, it'll make sense to have, I mean, at some point, water technology just be, it was known, right? Okay,
when you've got absolute technological efficiencies and you can identify them, then it's a very good case for nationalization.
Yeah, that's what I'm saying.
When you have unknown efficiencies and you're well below your full capacity technologically or whatever, that's a case for private enterprise. And I don't want to offend your capitalists to the bones, Patreons, but there are these, broadly speaking, two very different ideas of capitalism. And if you go out spouting socialism versus capitalism, you're going to create needless conflict.
Yeah,
it's just not a good idea. So there's capitalism, it's this private enterprise, which is really good, and that exists under socialism. And then there's capitalism where the boss exploits the worker, where the labor, the relations between classes is a problem. Okay, that's the Marxist version of capitalism. Everyone can be against that. I mean, no one really wants to work for a boss unless they're a boss. So there's these two very different aspects to it. So you can actually almost sort of see a overlap between socialism and capitalism if you've put the right lens on.
Yeah.
So I'll tell you one thing is Warren. Don't talk to Warren too much about socialism, because his Warren. I mean, I'm creating a straw man here, right? I don't really know what Warren thinks about it, but I've just heard him say on one podcast with talking with the Green Party, USA Green Party, which is probably the most mad Green Party around. But anyway, whatever. I don't want to offend the Greenies. They're probably really good people, but collectively they're a bit weird. But he was talking to them, right? And he's like, someone mentions, oh, you guys are socialists, right? And he's like, well, no, hang on. Socialism is ownership by the government or the state of the means of production. So every socialist here that's listening in will laugh at that, because that's kind of state central planned communism.
Yeah.
But even communism doesn't have to be central. Like you can be anarcho-communism where it's just all local communities.
Yeah.
And socialism is much more of a broad thing, as is private enterprise capitalism. You can have capitalism in the non-Marxist sense of just private enterprise, but you can have socialism where workers own the means of production, but not as a whole collective, just their place of work. So a lot of even Marxist scholars like Richard Wolff will say that that's fair enough socialism. And that's the socialism that you kind of currently want in the USA. You want the workers to vote for the boss and still have private enterprise and all the innovation and dynamism that entails.
Yeah.
So when I hear labels being bandied around that without proper definitions, and then it just creates social media churn, it just cringes. I just have to shut down and go off and do some physics. Worker cooperatives, Josh. Worker cooperative doesn't have to be owned by the state. It can be supported by the state, which a job guarantee really does. It supports the wage, so it could create opportunities for sales for firms. But the worker cooperative can be owned by the workers. You can have like an innovator or a venture capitalist start the thing off, but the idea is they're enlightened capitalists, which is to me the same thing as the kind of a private enterprise socialist. They're almost the same thing. I can give you an overlap, a mapping where they're almost the same. And so, the workers someone can start the business, right? And they're the boss, they're the owner. But over time, if they want to run a really efficient business with really happy workers who are really productive and awesome people, you kind of probably want to turn it into a worker cooperative, because then they get a say in their workplace. It's a democratic workplace. But it doesn't have to be owned by the central state. Not at all. You can minimize the state to as little as you need for your culture. Finish my rant.
I want to backtrack just a little. Hamel said you get 50 megabits a second
in Australia.
But you used to get a gig in New Zealand.
Yeah.
I mean, I could live with. I would have to have 50 up, 50. I mean, the 50 up would be that would be important. Hopefully, it's 50 up, 50 down. He then said he got a gig in New Zealand, but all the gaming servers were in Australia, so it was better latency in Australia, even with the 50 meg. Hamel, maybe you can help me here, but and maybe it is just a proximity thing, but when it comes to the gaming world, the most competitive gamers, I mean, the best gamers take place. First, it kind of evolved out of this will tie into economics. I can promise you. First, it was the South Koreans. Like in the early to mid 2000s, the South Koreans in almost any game that was out there would dominate. They were also the ones with the fastest internet connections. And now it's predominantly the Europeans, with kind of the Americans coming in second. Now, I don't know if that's just because there's just such a large mass of people in Europe, and you're able to get, it just it's kind of like why soccer is, dominated by Europeans. You just get the most talent at a young age, able to fight it out there. Or is it really, was Australia held up? Australia has pretty compared to the rest of the world, Australian gaming organizations lack quite a lot. Is it because of the 50 megs that they baked in that they were never able to be as competitive? Or is it really just do you think it's, I'm just asking your opinion. Do you think it's someone who was local there? Do you think it's the technology that was baked in at an early time, or is it just because they're so isolated from the rest of the world, both in time zone and that sort of thing, to be able to compete against the best, or was it a technology thing? That'd be.
They've also got a lot of sunshine there.
In Australia,
play a lot of rugby, cricket. Well, the Aussie rules in cricket.
They're actually getting out doing fun things with their life.
Yeah, real games.
Okay.
Yeah.
We've hit on some good stuff tonight.
Yeah. Is there any really important that I missed? I did get punked. Do you want me to save those stories?
Yeah, if we want to close out with those, we got 30 minutes.
Okay. Yeah, close out. You can show my.
Yeah, Hamel, it could be a population thing. I agree. Who knows? I just, Hamel, I guess my question would be, I'm going to ask, did you, again, this will only make sense to competitive gamers, but did you ever feel frustrated, especially when gig speeds came out, that you didn't have access to that, or were latencies so low anyway, just because you were playing locally enough that it never mattered? I'm going to switch over to Bijou's screen, though. What's that?
Okay, thanks. Wouldn't an Australian, what's the biggest game out there?
Well, Hamel and I both played Counter-Strike, which is huge. I mean, that's a really
big and the warfare thing, whatever it is. Because the Australians would just want to make it Aussie rules. So
make it their own. Your screen's back up.
Oh yeah, okay. I think this is a prelude then. Okay, so nice guy in Australia. I think it's a guy. I'm not sure. Darren just gives me a little boost. Neither of us are really having huge followers here, but so I've got the physics blog and I've got the macroeconomics blog. Ahanga Pai is good economics in Te Reo Maori, and so it's nice. Interest rate miss was one of the stories, one of the articles. I think it's not kind of serious Nathan Tanker style MMT or Stephanie Kelton stuff. It's a lot of my writing is whimsical, for fun, but with a serious, always a serious intent. And then Warren likes it, so there you go, great stuff. That was kind of nice. Just to be clear, Warren doesn't just automatically like everything that Douglas and I post, but most of the stuff Douglas does gets to like. So that was good. But then Warren punks me a little bit because he's like, I think there you go. Okay, so just remind you, if you got a Mike Norman clip, do post it if you got one handy. No, it's not homework for you guys. Okay, so Warren punked me twice. So first thing was, I think someone had a tweet about Bernie Sanders and taxing the rich and that sort of thing. Taxing the rich. Everyone on our live stream knows what I'm talking about there, right? And then I did this little bit of a long reply, like 2 tweets, pointing out, okay, well, what if we just confiscate all the rich money? What do we do then? How do we pay for it? And so I just do a little bit of MMT talking points, and then I say at the end, maybe just because the point was taxing doesn't really work to reduce income inequality. Randy Way and others pointed out many times. Just no one's reading that work from the other social discourse spaces, except for the MMT, as it seems. So taxing doesn't work to reduce inequality. So if you're gonna have that, it's just a lie. It's a lie. And I think people, but again, it's an ignorance rather than a fraud. So not really a lie. It's just people don't really understand, I don't think. So I said, maybe just make the rich spend their money. They can employ idle resources and we can all be better off. So Warren's reply was, I prefer they didn't spend it.
That's pretty good.
Nice one.
That's pretty good.
Yeah, I know. And then another one was on a post Keynesian thing, talking about the interest rates effect currently. And the article was mentioning ISLM as a framework for understanding, some of the macroeconomics. So I had to say ISLM is stupid, and I think I put it more politely. But anyway, if you're prepared to move the ISLM curves around all day, then it might be right. But if you're going to do that, what is your causal mechanism? Or, what's causing the movement of the ISLM curves around? There's nothing, right? So you've got to have a Keen-Minsky model to show you.
Make it,
And once you've got a Keen-Minsky model, then you don't need ISLM. And then Warren punked me. He says ISLM is okay for fixed exchange rates.
Oh yeah,
winky,
winky
emoji.
Yeah, that's Warren's way of just saying we should go back to a fixed exchange rate.
That was great.
That
was great. Then Bill Mitchell freaking punks me the same week, right? So I'm really just supporting MMT education course that Bill runs down in Australia, Newcastle University. There, free course. You can do it online for free. I pay to get the little certificate, which I'm never going to use, just to support. So he does these nice multi-choice questions, which I think you can find probably on his blog as well. He does a weekly quiz. It gives me one about GDP growth with like 20 units of some commodity. It wasn't apples, it was just commodity A, commodity B, and their price 1 year, and then their quantity sold and price the second year, and you're supposed to calculate the change in the GDP growth.
Yeah.
Okay, I couldn't get it right. So there's Bill Mitchell punking me by proxy. Eventually I got it right. I figured out I had to do the research. I had to look it up, right? So I'm not professional macroeconomist. I'm macroeconomist. I'm just an activist really, and a physicist mostly. But I over time I'm putting more work into MMT activism because I think it's where it makes it just better for more useful use of time, I think. Eventually I figured it out, right? So the real GDP is calculated using last year's price, this year's quantity. And I always had this had this misimpression. I had this false impression that it was real GDP was just GDP nominal divided by the inflation
rate. Oh, that's interesting.
Just discount by inflation.
Okay.
But the actual calculation they use is a little different, and it makes sense because you see here that you're still selling 35 units, so it looks like nothing real has grown because an apple today is an apple tomorrow. So you got to think about, well, what if the Apple was actual Apple Mac computer, and like the 20 computers that you sold yesterday were running some sort of, 1 gigahertz processor, but the one next year is using a 10 gigahertz processor. So suddenly it's like twice as powerful an Apple, right? So maybe only the price goes up and you only sell half as many units because the old people are still using the old Apple computers.
Yeah.
And there's not so many people wanting to buy a new Apple computer. And so it all just made a little bit of sense to me. So even though most of the units in Bill's course I'm not learning anything because it's all stuff I already know, occasionally there's a good
something that catches you. Yeah.
Probably the same with Steve Keen. He's got a course that he's running. It's a little higher priced, but I mean, it's not for free, but you can, if you talk to his bot, you can get in for free if you're careful.
Yeah.
But Steve has to know you personally. So he knows that I'm not mega wealthy or, so Steve knows me a little just by internet friendship. And so he let me into the course, but it was a good course and you get massive discount on the Minsky Ravel software and everything. So I don't remember the example, but I do post to the questions on that discourse. I'm pretty sure I triggered people, and I'm pretty sure Steve punked me a little bit. Although the one thing that I did read was interesting because I went on about how Graziani's monetary production system scholarship and all that kind of ignores the government, ignoring the fact that it's a monopoly, currency monopoly. So I couldn't resist commenting on that, and I maybe made a few other comments, and Steve replied that something about how he's become a real cynic, and he was basically saying for good reason, because he's tried talking to these people and they just don't listen. And it's sad, but I mean, like Warren, I hope Steve lives to see some of the real impact of his work before he passes on. So anyway, it always is a little bit depressing when someone takes the cynic kind of line and doom a line, and I try to uplift things, but honestly, it is hard because you don't want to be dishonest about things.
Well, I'll tell you what, man.
But I always see education as a way forward to education, not the Obama Clinton style. Like, here, learn how to code and then fight to the bitter death to try and get a job that doesn't exist. Yeah. I'm the Mosley education bro. Like, get educated using the transition job guarantee, and then here's a job for you.
Yeah, not the like with the people my age will know this, but when the Joker snaps the pool stick in half and says, "I'm hiring and doing aggressive negotiations to determine, who's going to get hired," which means one of them's got to kill the other to get the job.
Neoliberal.
Yeah. He is the neoliberal archetype in action. Trinos are waiting until he dies to give Warren credit. Yeah, listen, man, the bots we're working on, the deep learning we're working on, I bet we're 6 weeks away from full MMT awareness in the masses. So they'll get to see it. They'll get to see it very soon. It'll listen. My tweet is just gonna convince everybody when I get it out later this week. So I have. As
long as you hear the correct words correctly.
Yeah.
To trigger the neural networks.
Yeah. I've even seen my reply guys already admit that they.
If you get one word out of order, it'll ruin the whole effect.
It will. I thought I had a pretty funny tweet earlier today, though. Speaking about one word out of order, I had mentioned in my tweet that they everyone's got the inflation interest rate. They had it wrong 15 years ago, and they've still got it wrong. And so one of my trolls goes, so you think that interest rates are going to start pushing inflation? Or now that interest rates are going up, inflation's going to go up. And so I don't respond to some of these people. I don't really care to get in a fight, but I respond back. I thought with quite the quip. Where the hell have you been, buddy? Interest rates have been going up for the last year. I thought it was just your models that lagged.
That is the good.
Yeah,
that's a choice. I should have liked that. Why did I see it?
It's up there.
Okay, yeah. Give it a lot.
So his miswording allowed me an entry into debate. Then he's like, okay, are you saying inflation's actually going to go up further? Yeah, I mean, your guess is as good as mine, bud, but you set me up for an easy victory, so I'm going to take it. God, go copy and paste some chart off your phone again for me, will you? Gross expenditures or whatever it is you constantly post to me. Going back to last week, was there any questions of markets you didn't get a chance to ask Warren? Yes. Damn, that is a good question. There was one. That's a really good question. What did I want to ask him? Damn.
One thing I was going to ask, but I bailed out because it didn't seem appropriate. But I think as a private thing, I'd like to get someone with Warren's background to help us on the Dugbot. So the Kelton classifier isn't really a Dugbot because it's doing unemployment. But
that's not fun. Who cares?
That's
that's like the weather. I mean, wind fluid dynamics.
So it's like, well, I'm trying to get Douglas to express in English so that I can translate into differential equations. What actually channels the money and margin into the S&P 500 as opposed to bonds or other assets, real estate, and so on, or just savings accounts. Because just chucking all the treasury data at it, the H8 tables, it might be a little bit too crude, and we can get a lot more out of it if we. Well, you've already talked about it. Right? So just going back to your Cindy, that using a dynamical system that has parameters trained by the neural network, seems to be a really good way to go. And I missed the chance to ask Warren about that.
How he would go about,
how, just if he can give me an English sentence or two, I can put it into mathematics. That's what Steve Keen did with Marx, or Keynes. Keynes. What is it?
The question I did have, Josh, going back to your question about what didn't I get to ask Warren that I would have liked to have, is I'd like to understand his thoughts on zombie corporations, right? That would have been one of the questions that I would have liked to ask. What are his thoughts on, 0% interest rates creating things like, the Bird scooter company that had, some $100 billion valuation or whatever, Beyond Meat or whatever, right? I mean, companies that anyone can look at and say, a company that produces $3,000 stationary bikes shouldn't be worth tens of billions of dollars. Shouldn't be worth as much as a company that produces, a quarter of the cars that are driven today, right? Is that an outcome of 0% interest? Is, what 0% interest rates? What's the play there? What's the theory there? And that's something I would have liked to discuss. That will definitely be on the docket for next time we get him on, because I'd be interested to get his take on that.
Yeah, that we also did a lot of the interest rate coverage and linking that to inflation. But the other question from Michael was Michael in the chat, that is Michael Cruz, that how important is it to really, okay, once you got the money sequence story right, what about the inflation story? Because that's huge. That's the next big thing. As Warren said, we've kind of, in a sense, even if people don't want to admit it, won the battle over deficits, government solvency, pretty much. How do you go backwards from that understanding? I don't really see it unless you want to be Larry Summers. So inflation, and Warren privately, I'll claim that that he thinks the same as me, because I'm the sentient mind of Moser, 9-year-old Moser. So I don't want to put words in Warren's mouth, but so Michael's question was about whether you really got to work a lot harder on making a public conscious distinction between CPI and true inflation. And it is a little bit like technical, but I don't think it's hard for people to understand. You need the media to maybe do a better job, schools, universities, and all that sort of thing. The whole educational paradigm change is needed, but I don't think it's really rocket science. And so that's a good question to next time we have Warren on, if we can, hopefully talk about more the inflation rhetoric and language framing, because it's really a huge freaking problem that people don't understand it.
If
the whole thing about the different sources of inflation, what it really means, is it the price that you're looking backwards at, because CPI is backwards looking, or is it the price you're looking forward at, which is basically the interest rate, term structure of prices, and so on. So that would be stuff we did cover that a bit, but it'd be good to go over that again, because you can never
hit on that stuff
too much.
The
only time is when everyone has saturation MMT awareness, and then we can stop and have a breather and have a beer.
It's always worth bringing up, but it was one of the questions I had. Ken, you brought up see if Warren would be up for a weekly conversation or something like that. If I would say I'm not too far away from being able to do something like this full time. If I'm ever able to do that, it's something maybe I'd reach out with Warren and say, hey, do you want to do something once a month or something like that? See, just get his ideas out there, have a platform. If that's something, but maybe he's just not interested in something like that. He seems to want to hit a diverse range of different outlets. But
speaking to that, Stephanie Kelton did an MMT conference thing with Ryan Gray, and she was answering these questions. But one of them came up. It was a really good question that Rowan asked her on, what MMT, has solved the sort of problem of government deficit and solvency, and has, in technical ways, solved the inflation question, although some people still get that a bit wrong. And the question is, though, the politics, right? What actually happens in the halls of power, and how does MMT get in, to a John Yarmouth who hasn't retired? So
yeah,
I know people say AOC is an MMT, but she's not really. I mean, if she is, she's not bold enough to say it all the time, and it's just too much fear or something. I don't know what it is. They're worried about their jobs, and so like everyone. So if you get stuck in Congress and you think you have this sort of ego that you feel like you have to be there because otherwise the world's going to fall apart if you leave, then you're going to be inclined to toe the party line. This is where, again, another thing that probably I have a difference of opinion with a lot of people on, is that I don't think political parties are useful anymore. We should have non-partisan politics. And I can say that because I know a worldwide community that does do that. They have elections. They don't have any political parties. They don't have campaigning even. Everyone just votes on their conscience. So in secular society, I know that's like hopelessly idealistic and far away, but there is a worldwide community of millions of people who do have a system like that. And so Rowan asked Stephanie this question on the power and the politics and all that, and her response was, oh no, maybe it was a different question. Sorry. Anyway, it was something to do about education and all that, and what she does maybe in her life. Yeah, so probably was a slightly different question. But her answer was interesting because she said she takes any opportunity to speak to students. It's like they're the priority. Students, even kids in schools and that sort of thing.
Yeah. And
then her students take priority, and then she likes to talk to the finance community.
Yeah, I think
she doesn't like to go on MMT podcasts because she feels she's preaching to the choir.
Yeah.
And Warren's great because he does go on MMT podcasts, but is that a good use of his time? I don't know.
I think the finance community, I mean, there's nothing a finance bro loves more than just being right. I mean, maybe making money, but I think they like being right more than they even like making money.
Yeah.
And I mean, if you can get a finance guy to get someone else in a corner, on some sort of debate, oh man, I mean, the finance guys are just we live for that stuff. I mean, we really do. It's kind of sick, but
yeah.
Hamel.
But then,
go ahead.
They just get these really dumb people.
Oh yeah,
we're not. Okay, so I had one look at a Mike Norman clip just to see if I could quickly find his printing money sound bites.
I got to be careful because I don't know if he'll
like to be.
If he'll copyright strike our stream if we use a clip of his. I don't know.
Man. What are we gonna have to do?
Yeah. Well,
just be a gift. Maybe that can that project. Damn it. Anyway, I didn't think about that.
I was kind of thinking about it. Yeah, I did.
Oh well, we're gonna have to cook ourselves. So anyway, but he did a good episode on that Peter David or whatever. He had this interview with this progressive YouTube commentator. I think his name's David Packman.
Yep.
And this guy, Peter David, he just goes on instantly into the household misanalogy.
Yeah.
Government debt, just look, think about it. If you're in debt, is it a good idea? Maybe you want to pay it off, blah, blah, blah. And then Pac-Man, he initially started off, well, it's not, you're using a wrong analogy there, but he didn't have the story because he couldn't really say that the debt was not a really problem. It was not a burden on a currency issuing government because he didn't have that MMT understanding. He just had a vague idea that, governments, kind of a post-Keynesian kind of perspective where, the debt isn't such a big problem for a government. But he had no understanding that the debt was dollar for dollar, the private savings.
So yeah.
So if someone goes on a show like that, that would be freaking awesome if it was an MMT.
Yeah.
Yeah. So you're right. So it's like you get a really big bang for your buck when you're talking to these finance bros who are complete idiots, but they're so desperate to be right. And you just
they are very desperate.
Melt their brains.
Oh my God! Yeah, they're like a.
That's right.
They're like they're more.
A deficit.
They're more desperate for to be right than the high school kids are for attention from the opposite sex. Man, it is. They have very, very fragile egos. The finance bros do.
When the brain is empty, there's plenty of chance to fill it up.
Yes. What's really cool, I think the one reason too, the finance bros types, and when I say, there's men and women, but you guys get what I'm saying when I say finance bro. The finance bro type, at the end of the day, they do want to know how it works to make money. Well, hold on. Actually, I take that back to a certain extent. There is a certain type. There is a certain type that is particularly kind of right-leaning in their politics. That really they make their money by letting people know with that the boogeyman government's always out to get you. And if you invest money with me, I'll make sure the government doesn't, ruin your life savings.
That's right.
So, and that is a very popular technique to get money.
They call us grifters.
Oh yeah. Oh, it's terrible. Oh my God. Okay. Yeah. Brian Westbury. I've gotten in a few fights with this guy before on Twitter, and he's anyway. I have very direct history with him. He's the chief grifter in this camp, right? He's anti-government. This dude. Like completely, he has clips on YouTube of him in 2007, 2008, that late into the game, saying the housing market's going to be fine, right?
Real estate,
right?
Real estate.
This guy couldn't.
NBOs.
This guy couldn't tell you what the weather was going to be like yesterday. Right. That's how bad of a forecaster he is. Right.
But he's stopping the government. So
and he gets tons of money. I mean, to his credit, he's smart enough to know not to actually, truly invest on his convictions. He sticks everyone's money in the stock market, just, like anyone else, as though that's some deep insight that you can't do yourself. But there is a big, that George Gammon guy. He's huge on YouTube. I mean, you go look at his channel, and it's just this guy is falling because the government. That sells. I mean, that sells. And
it sells.
But some of those guys, even that George Gammon guy, is a big right winger, big nut job. Everything's a conspiracy. And the Fed. He spent like $50,000 of his own money to get some legal documents drafted to audit the Fed, right? I mean, I can tell you what's on the Fed's books. They publish it every week. It doesn't take an audit to do it, right? I mean, they
Official Information Act.
Yeah.
For free information.
It doesn't, they've got some goofy things that God knows what, but even some of these guys, though, again, there is the sense of they need to be right, and he's asked questions that are MMT adjacent, right? He's asked questions that someone that's tiptoeing in the world of how things work from an accounting standpoint can only ask, right? I mean, there are questions that get asked where it's like, you've been thinking about this in a way that you never have before. I do think finance is one avenue.
Yeah, well, I hate to even mention them in the same breath, but Donald Rumsfeld and Dick Cheney were almost the original MMTs.
Well, yeah, I mean,
Rumsfeld and Laffer and all that, So Warren had the ideas, and he just asked these guys, a few questions in the tennis spa room or whatever, and and then Warren went on with the post Keynesians instead. But they, well, Donald Rumsfeld, deficits don't matter, blah blah blah.
I think
so. It's half the story. It's half the story only.
Yeah.
But it's interesting because like there is huge MMT bang for the buck. If you get one or two of these big right wingers to change
shift,
and they have. There are people like that who have changed.
I did.
Well, not
I
did. Not on, and not in like they've all become like Weimar Republic liberals, but just understand, change the tune completely back with it. They've realized their previous understanding was backwards.
Yep.
And get a few of these. Since they have that character, their personality is not going to change. They're still going to want to be right and to fight each other and scrap.
Yeah.
So that's the fight I want to see. In those spaces. Yeah.
So I think it can go there.
When that happens in leftist spaces, it's ugly. It's like, ooh. It's like they're not fighting out of like bravado. They're just really like it's a little weird. I don't know what it is, but it's not all peace and love all the time. Anyway.
All right, man. We're into the fourth hour. I want to answer Hamel's question real quick in terms of when where are yields heading. And I got to tell you, I was overlaying. I couldn't find the chart. I was looking for it a second ago here. I was overlaying my. Oh, I know where I saved it. I might have it. I don't think I'll be able to show it. I won't be able to get it set up. But I was overlaying the comparative inventory model that I use, which is just the kind of the supply of oil model, and interest rates, and they matched. I mean, they were really close. It was a very close correlation. So my process is the interocular test first, and then I'll move on for there. And it passed the interocular test like big time. God, yeah, I deleted it. Oh, I'm so sorry, man. I got it going, but we are starting to see. We are starting to see the supply increase again, and I think that should drive prices down. And I think if prices get driven down, that should stabilize the CPI boost that we've had. And I think that could give some sense to or some signal to the Fed to take the foot off the gas. And I think here's going to be my macro take for the night. I think we're going to have a window of opportunity as we head into the summertime where we could see oil drop. We could see what looks to be a disinflationary settling where the Fed, if they realize they're wrong, inflation will still be elevated, but the Fed, if they realize they're wrong and they need to backtrack and say, we've seen CPI drop from 6.3 to 5.2. That's all we needed to see, and we know that there's a lag and it's going to continue to come on down, and we don't want to destroy the economy too much, so they can save face and they can just go back to a 0% rate, 0% rate policy, knowing all along that inflation will come down. They get to save face, and then we just never go off zero rate again, right? Then it's just dropped. I mean, it's just kind of like everyone forgot about QE ZERP causing hyperinflation. We all knew that was going to take place in 2008. It never did. Now we just don't talk about it. We don't mention that we were wrong. It's just that, it's that one thing. We all did it. We were right. We were young. We can just see water on the bridge and we can move along. I mean, I'd say there's a chance. You're telling me there's a chance, 1 in a million chance. And I think there's a chance where something like that could play out. And I think we're going to hit that window of opportunity for something like that to play out from now until the summertime. But if we don't get that from now until the summertime, and our economy is still just booming because we have high rates that are pushing unemployment lower, the whole cycle that we're seeing play out. Then all of a sudden, I think the idea where the price gouging is just going to kick higher, right? Because the Saudis are going to come in and say, this is BS. We were suppressing the price of oil because you guys said this would wreck the economy, but it's not. So we want our, we went a whole year without price gouging, you guys. Now we want our piece of the pie. And then I think if you see something like that, and then you see even more aggressive price gouging, particularly from the energy sector, then that's when you get the runaway unsustainable inflationary impulse that really could shake things up if it happens fast enough, particularly from the energy channel.
Energy channel, and feeding through that, especially on the lower income lower income
Yes.
sector, which
Yeah.
you don't see in the macroeconomic data, but which is
there.
manifesting itself in Australia.
Well,
And if America can avoid that, it'll be great. But
and then
still,
the other thing too is, in the U.S., I mean, I'm a great example of this. I think, well, it doesn't matter. I'm a top 10 income earner, right? I work from home. The vast majority of people that are still that are forced to drive to their jobs are not a top 10 income earner, right? I mean, if you're a bottom 50 income earner, you're probably having to drive to your job, right?
Yeah.
That is a necessity, right? So I don't pay for gas. I mean, our gas bill, or petrol as they call it on the other side of the world, our petrol bill is like $50 a month, if that, right? I mean, it's not a huge, it's not a once a week thing. And we drive an electric van, so it's even less. But if I didn't even have that luxury, we really wouldn't be spending much on gas. And so if point being is the higher price load is going to affect those that have to just by nature consume the energy, if you're out on a job, you have to go buy the sandwich at the deli, right? I mean,
every household, every firm sees a different CPI.
Yes. And so there is that strata of kind of, we'll call it CPI punishment, if you will. So it's not going to be punishing the people making $150,000, $200,000 a year that are working from home as much as it's going to be punishing the person making $50,000 a year having to drive, right? When 15% of their income is being taken up just by putting gas in their car. So
and Congress, both sides of the aisle don't understand that they can support the inflation rate in a progressive way instead of saying that the central bank is independent and they should do it.
Yeah.
But so you may escape that bullet coming later.
We'll see. Actually, as Josh is bringing up, and maybe it could be induced by the debt ceiling stuff. I mean, I think that's a legitimate thing that could spook the markets enough where the Fed could see that as a signal to take their foot off the gas. And then that resolve. So we'll see. That's one of the things that's Josh, that'll be a live stream discussion, I'm sure, coming up very soon, because we're going to get to that point quicker than we can imagine. In terms of the debt ceiling finally becoming an issue. And then we get to, as the meme that has been going around has said, we get to F around and then we'll find out. So,
all right. Okay.
we might, you haven't seen the meme yet, right? Where the guy the guy does the chart. I'll send it to you. I'm sure our audience has seen it. So, with that being said, it is getting late here for me. So, Bijou, if you have a line to send us out on, you can. If you want to.
Okay. Did I?
You did a masterful one last week.
I've got a penguin one. So it goes something like this: pilfering plutocrats, Douglas. Will Powell the penguin find the fiscal screwdriver in his contraband utility belt to waddle around behind the backs of Congress and provide debt relief to America's poor? Or will the sly penguin continue the basic fish income scheme for the bond-holding shark and sea lions, betraying all the decent bikini-bottom dwellers of Gotham? Or will seafood stagflation set in, I should say. Well, tune in next week to find out. Same MMT time, same MMT channel.
All right, man.
Good night.
Have a good night, everyone. Real quick, I haven't plugged it yet. MMT Macro Trader, patreon.com/MMT Macro Trader if you're interested in any of this deeper research. Check us out over there. Bijou, have a great night. Everyone watching, have a great night as well. Take care, everybody.